Today on the Blockchain Report, Bitcoin's down to 114K. Yikes! And it might be because Tether just hired Trump's old crypto guy because nothing says trust us like outsourcing your reputation to DC. A researcher says Bitcoin could collapse in 7 years, which is adorable considering it's already survived 474 obituaries and counting. And later we'll be joined by Bitcoin's ultimate fire and gasoline duo, Keiser and Stacy Herbert, right here to talk about adoption, El Salvador, and why fiat is basically a zombie that doesn't know we're dead yet. All that and more, let's go! Good morning and welcome back, my fellow Bitcoin degenerates, to another episode of the Blockchain Report. I'm Hank Hudson reporting live from San Francisco. It is Tuesday, my friends, the day where Monday fakes ambition, gets margin called, and your inbox looks like FTX's balance sheet, and your boss suddenly remembers that quick update really means 4 more meetings. Ugh. Before we dig into today's circus of Tether hiring lobbyists like their Pokemon, researchers declaring Bitcoin dead for the 500th time, and miners pivoting harder than politicians during election season, smash that like button like it's Stifler's mom at prom, and follow RoxomTV and yours truly at Hank at RoxomTV, because unlike your favorite influencer's price target, at least we exist outside of a Telegram chat. All right, we got a lot to do today, but first it's time for us to check the charts to see who's winning, who's wrecked, and who's still telling their spouse, it's just a temporary dip, honey. In this morning's market rundown, let's get to it. All right, let's see how the markets are shaking out this morning. Oh no, this is the kind of day that makes me cry into a pillow, but I'll do that later on my own time. Right now, Bitcoin is tumbled back down to 114K, actually right beneath that right now. We're down nearly 2% in the last 24 hours. We're gonna get to the bottom of that in today's show, so make sure you stay tuned. Ethereum, a lot more of the same there. They're down all the way to 4,200. They are experiencing quite the dip as well. XRP also feeling the pain. They're down over 3.5% this morning. Cardano down 2.5%, and Dogecoin down 3.5% this morning. We got a lot to cover, so we're skipping TradFi today, and let's get right to it at camera one with this morning's bull run. Let's go. All right, well, it's time for this morning's bull run where we go over the top stories of the day. Let's get into it. There's a lot of them. First up, Tether. Yep, the company famous for running the world's largest stablecoin while being allergic to audits has decided that it's time to look respectable right here in America. So they've hired Bo Hines, former head of Trump's White House Crypto Council, as their shiny new U.S. strategy advisor. Because when you're trying to prove you're compliant and trustworthy, why not bring in a guy whose previous job was writing crypto policy for the Trump administration? Now, Hines' role is to help Tether shape and execute its U.S. market entry. Or in other words, kiss babies, shake hands, and convince lawmakers that Tether isn't about to accidentally nuke the dollar. In his statement, Hines waxed poetic about how stablecoins can modernize payments and increase financial inclusion, which is a nice way of saying your bank sucks, so please just let us do it instead. He also promised Tether would deliver an ecosystem of products that will set the standard for stability, compliance, and innovation, which are bold words from a company that spent years dodging regulators like they were bill collectors. Meanwhile, CEO Paolo Adorno says Bo's understanding of the legislative process and practical blockchain use cases will be vital, because clearly what Tether was missing wasn't transparency or audits, it was a lobbyist with really good hair. Great hair on that guy, look at it. Now, the timing is suspiciously convenient. Tether is trying to move into the U.S. market just as new stablecoin laws under the Genius Act are taking shape. So yeah, nothing says we're serious about compliance quite like hiring the guy who helped draft the rule book. Now, whether this ends in a warm handshake with regulators or another congressional hearing, Tether wants in, and it's bringing a former White House insider to make sure the door actually opens. All right, and joining us today, we have one of our good friends of the program, Anton from Xapo Bank. Anton, how are you, my friend? Welcome back to the show. It's always a pleasure having you on.
Hello, Hank. Good morning. Very excited to be back. Bitcoin is falling, so before you ask your question, let me go and buy some, and I'll be right back.
I love it. You got so much spunk, especially for a new parent recently. How's that going? Everything good in your world? You getting enough sleep? You look great.
Yeah, I look great. I look great because I buy Bitcoin pretty much all the time. My baby is a Bitcoin holder. He's probably the youngest Bitcoin holder in the world. But yeah, I mean, everything is great, and I'm excited to see what's happening today.
I love it. Start him young. All right. We're gonna read this story and come right back to you, Anton. So stay pat, my friend. We'll be rejoining you in just a second. All right, and we're back. Sorry about that delay, friends. If you've been watching the show, you will remember that we had this bird get loose in the studio recently, and I think he's brought friends, and they're all just chewing up our fiber optic cables, so it's wreaking havoc on the studio here. Luckily, they bought me a BB gun, so it's hunting season later. But we're back, so let's get into it. And we're going to start again with a very fun math problem for you. Out of Bitcoin's 21 million hard cap supply, about 19.6 million have already been mined. That's about 93.3% of the total, which means only 1.4 million BTC is left to come into existence. And thanks to halvings, that trickle will drag on all the way to the year 2140. Yeah, that's the last Satoshis will be mined long after all of us are dust, which makes Bitcoin's scarcity even more absurd than it already is. Now, by 2035, 99% of all Bitcoin will be mined. But that final fraction, well, it's basically Zeno's paradox, but with money. It keeps shrinking forever, but never fully disappears. Now, add in the fact that somewhere between 3 and 3.8 million coins are likely gone forever. Lost wallets, destroyed hard drives, Satoshi's silent stash. So the true circulating supply isn't 21 million. It's probably closer to 16 or 17 million, which means each coin is even scarcer than people think. And unlike gold, which can be melted, recycled, and hoarded by central banks, lost Bitcoin is dead and gone forever. And that engineered scarcity is why Bitcoin's value keeps climbing while fiat gets inflated into confetti. But what happens when all the Bitcoin is mined? Won't miners just pack it up? Nope. The reason is the network has built-in self-correcting feedback loops. If mining isn't profitable, difficulty drops, making it cheaper to mine. That's why when China banned mining in 2021 and the global hash rate cratered 50%, the network didn't miss a beat. Mining continued, difficulty adjusted, and Bitcoin went right on ticking. Even when block rewards approach zero, miners will rely on transaction fees. In fact, in April of 2024, miners earned more in fees than block rewards for the first time ever. $80 million in a single day. And for the environmental FUD crowd out there, more than half of Bitcoin mining is already powered by renewables. Because miners chase the cheapest energy, and guess what? The cheapest energy is usually surplus and clean. So the next time someone says Bitcoin uses too much energy, remind them the real problem is that dollars keep getting printed like toilet paper. Bitcoin is scarce, unprintable, and unlosable, unless you're the guy who threw out his hard drive in Wales in that dumpster. Ugh, that must have been brutal. All right, we're bringing Anton back. Anton, with 93% of Bitcoin already mined and millions already lost forever, do you think the market truly grasps how scarce Bitcoin actually is?
Understand what's happening. It's taking time for people to really comprehend that the Bitcoin will be mined in 2140 a year. So Hank, right now we are producing approximately 450 Bitcoins per day. And you can see that the treasury companies are buying much more. What's happening is that we still have a lot of OGs that are selling, but very, very soon their selling power will disappear, and then it's very clear that the Bitcoin price will skyrocket from here. And Hank, you mentioned something that there are approximately 6 million coins that have been lost. We should not underestimate the power of quantum computers. There was a very interesting quantum summit organized by Presidio Bitcoin a few weeks ago, and they brought one of the best quantum experts in the world, one of the best Bitcoin experts also in the world, and approximately 6 point something million Bitcoins. They are lost according to our understanding, but those coins will be they will be accessible in a few years from now, because from the public key you can derive the private key and you can access those coins. So at some point, the statement that those coins are lost forever, it may not be the case, especially with the quantum computers. But I'm not that concerned of this, because at the end, like Bitcoin is supposed to be the medium of exchange. Satoshi designed the most superior way of money to be self-sustainable. So at some point, the miners will actually be collecting fees. And what's going to happen, and what I can envision, is that after the Bitcoin, all of the available Bitcoin have been mined, Bitcoin it's going to become a medium of exchange. And Satoshi designed this in the white paper, saying Bitcoin is electronic peer-to-peer cash payment system, and you should be able to settle everything on top of Bitcoin. And I don't know if you are aware, or people that are watching are aware, but right now there are 9.3 billion transactions that are happening per day. Let me repeat, 9.3, and this is data from McKinsey. I'm not just coming with this data. And now imagine if most of this transactional volume is happening on top of Bitcoin. Can someone say that miners are not going to make enough money from transactional fees? No, of course they're going to make a lot of money. It is going to ensure the Bitcoin network is secure enough, it's robust, and no one can attack it. So I'm super excited for what's coming, and yeah, there are some threats like the quantum computing, but I think at the end Bitcoin will win, as the network always won so far.
Yeah, that's super interesting to hear about quantum computing. I was not aware that it could open up the possibility of potentially retrieving lost Bitcoin. So it really seems like quantum computing is the wild card in the Bitcoin space going forward, for both perceivably good reasons, but also not so good reasons, as a lot of people think it could potentially crack the network. But only time will tell, and I'm sure the people will be, the Bitcoin people of the world will be making the correct adjustments with quantum computing to, be ready for when that comes, because I think that's a future that we're going to be seeing a lot sooner than we think, but I think we'll be ready for it. Another interesting thing about this story, I thought, was that by 2035, which is only 9.5 years away from right now, 99% of Bitcoin will have been mined. How do you see that scarcity impacting price discovery over the next decade? Because that's a big number to wrap your head around. That's almost all of it.
Yeah, exactly. And compare Bitcoin with the goat. Like it's very predictable how much Bitcoins will be mined until the end of the world, pretty much. And then on comparing Bitcoin with goat, there is approximately 1.7% new goat which is mined every year. And then on top of that, you have Bitcoin, which mining is diminishing over years. So whoever is saying goat is better than Bitcoin, it's very, very wrong, because at some point we are not going to have enough new Bitcoins. And then what's going to happen then is that the demand for Bitcoin will constantly increase, as it was increasing in the past over 15 years. And then the price, it's very clear what will happen. We know what's going to happen. It's going to appreciate a lot. So I doubt anyone can argue that the Bitcoin price is not going to increase because of the halvings that are planned to happen every 4 years.
Yeah, absolutely. And people talk about the gold scarcity thing. I'm pretty sure I just read an article that there was a new mine they found in Asia that's got several $1 billion worth of gold. There's always a meteor passing by that they say has like trillions of dollars worth of gold on it. We saw the movie Armageddon. They can just send astronauts up there and mine it. So, Bitcoin, obviously, the scarcity is much better there. And from your perspective over at Xapo, How should institutions be thinking about Bitcoin's scarcity when allocating capital today versus waiting until the supply gets even tighter tomorrow?
What we are seeing, Hank, is that there is a FOMO right now from corporates. They are urging to buy Bitcoin. Zappo right now is offering this opportunity to buy and store Bitcoin in a regulated bank. We are one of the first, if not the first, regulated bank offering this opportunity. From a positive side, yeah, we have more and more corporate customers that are interested, but also it's taking time. You can see in some of the traditional financial companies, it's taking a lot of time for them to convince their board how Bitcoin can help their treasury operations to optimize their holdings. And also, we still face the issue with Bitcoin volatility, because once you have Bitcoin in your order book, basically this is changing your risk models. Now your volatility is increasing, and it's just taking time for those very legacy quantitative models to be adjusted with the new asset type like Bitcoin, because Bitcoin is very new for corporations and for corporate customers. So it's taking time, but the trend is very clear. There is more and more interest in this area.
Yeah, absolutely. And I think the fact that it is taking time is really indicative of the maturation process of Bitcoin and how it's not just a tulip frenzy, right? If this was something that blew up overnight and everybody was doing it, I'd be a lot more concerned about a quick crash. But like, we're in year 16 right now. It's been a slow and steady up and to the right, so to speak. Sometimes it's been kind of parabolic at the beginning. But I think that this pace is really indicative of the fact that Bitcoin is here to stay, and a lot of those haters out there are going to be eating their words, as we've seen them do for the last 16 years, including of which we got one in this next story I want to talk about with you in just a second, so hang tight, because Justin Bonds, he's the founder of Cyber Capital, is out here waving the old doom flag, warning that Bitcoin could collapse in the next 7 to 11 years. His case, well, by 2036, the block rewards shrink to just 0.39 Bitcoin. That's about $2.3 billion a year at today's prices. Sounds like a lot until you realize that that's supposed to secure a multi-trillion-dollar network. Bond says that math screams bargain bin 51% attack. He also blames Bitcoin's stubborn governance. Or in other words, core devs refuse to print more coins or pump block sizes during the block size wars. And Bonds thinks that rigidity is a ticking time bomb for splits or forced inflation. And then there's the old quantum computing boogeyman that we spoke of earlier. Bonds claims that one day a quantum computer will roll up like a hacker with a God mode cheat code and snap Bitcoin's cryptography like a Kit Kat bar. Opinions on this, they tend to vary. Yeah, I don't like it either. I don't like it. I love Kit Kats though. Opinions on this do vary, however. Google's Craig Gidney thinks the danger zone is actually between 2030 and 2035. Adam Back laughs and says it's 2 decades away. And Shamith Palihapitiya basically screams any day now. So in Bonds telling, Bitcoin will die from underfunded security, developer stubbornness, or a quantum AI terminator, whichever one ends up showing up first. But here's the kicker. People have been calling Bitcoin dead 474 times already, and every single time, Bitcoin just shrugs, gets stronger, and makes the obituary writer look like the punchline. There's actually a website, I forget, we talked about it on the show, where you can actually check out all of the instances in which Bitcoin was called dead. You can Google it. It's a good listen and read. So will Bonds be right this time? That's the big question, right? Well, maybe. But if you're betting against Bitcoin, history suggests you'll be the one holding the end of the short stick. We're bringing Anton back. Anton, Justin Bonds claims Bitcoin's block rewards will shrink too much to secure the network. You seem to not think this is a legitimate concern based on what we talked about previously. What do you think? Do you think this could be a concern? Is there any room for that? Or do you think that the reward sizes from transactions will be enough for Bitcoin miners to continue securing the network in the future?
Hank, I think this is one of the weakest arguments ever presented by anyone on Twitter, and I saw a lot of arguments explaining how the Bitcoin will die. Let's see what the author is saying. So he's estimating approximately 2.3 billion annual security budget from mining new Bitcoins in 11 years from now. We all agree this is a very small number, and yes, potentially this can lead to a 51% attack under the Bitcoin network. But Hank, this is according to the current Bitcoin prices. So we believe, everyone watching this show believes that the Bitcoin will cost $115,000 in 2035, which is 11 years from now, or 10 years from now. I personally don't believe it because the Bitcoin price appreciated from $400 10 years ago to 115,000 for less than 11 years. So do we expect the same to happen in 10 years? Most probably yes. And the Bitcoin is showing 40% price appreciation year by year. And someone arguing that the Bitcoin price will be exactly the same 10, 11 years from now, it's very hard to believe. And if this is the case, I think this having a potential security attack over the Bitcoin network is going to be our smallest problem. And then think about from the inflation point of view, like the inflation is going like crazy, and probably the purchasing power of 100,000 Bitcoins 10 years from now will be the equivalent of 50, 60,000 purchasing power today. So extremely fragile argument. The history is showing that the Bitcoin is increasing 40% per year. And considering the regulatory environment, having more and more very, very long-term buyers like like treasury companies or corporates, I think the chances are naive to think that this will happen. And then if you want, we can analyze also the argument that we just checked earlier about how the Bitcoin has been designed and the fact that we have 9.3 billion payments per day, according to McKinsey. And once we migrate to Bitcoin to be a medium of exchange and settlement layer of any type of transaction, then miners will have more than enough incentives, and they are going to be stimulated to keep securing the network and validating transactions. Of course, in order for this to happen, we have to keep building. It's fully on us, and I'm very proud to be helping to fulfill Satoshi vision to help the Bitcoin to become a medium of exchange. At Zapu, we are very soon going to enable our customers to deposit any fiat currency from anywhere in the world 24/7 without any delays instantly. And this will happen on top of Bitcoin. And from those 9.3 billion transactions, I believe very, very soon, a significant portion of them will settle on top of Bitcoin. And earlier today, Hank, there was a news from SoFi, very popular bank in the US. They're enabling this. So they're actually joining Zapo, which makes me very, very proud and very excited about the future. Yeah, because that's the Satoshi vision. Like Bitcoin was not designed to be a digital gold. Is it a digital gold? Yes, it is. Is it the best store of value? It is. But also, it's supposed to be a digital electronic cash payment system, and we are making sure Satoshi vision will happen.
Yeah, absolutely. And there's Satoshi soldiers like yourself and me and everyone out there that are helping fulfill that vision. And you make some really great points, right? Bonds' prediction is very much based on the ecosystem of today and not accounting for what that ecosystem is going to look like in the future. With Bitcoin going up and to the right always for the last 16 years, you would have to expect more of the same. And then to your point as well, when people start using Bitcoin even more so as payment transactions, there's going to be a lot more rewards for miners to receive as a result of validating those transactions and what will undoubtedly be a much more robust network at that time. So you make some really good points that he didn't seem to account for. Another thing that Bonds did mention that was interesting was that he was also arguing that Bitcoin governance is too rigid. From your view, is Bitcoin's refusal to change supply or block sizes actually a weakness, or is it actually its greatest strength? What do you think?
The best thing about Bitcoin is that it's open source. You can go and create your own Bitcoin, and then you can increase the market cap to be 100 million coins or 1 billion or 1 trillion. It's up to you. Everyone is free to create their own Bitcoin. But I doubt this guy will do it because at the end, Bitcoin is empowered by its community. But all of us supporting the network, making sure that we are building to increase the adoption. So that's the beauty of the Bitcoin. Like it's open source, everyone can increase the governance, improve, change whatever they want. But at the end, Bitcoin shown during the block wars 10 years ago, 8 years ago actually, that you can copy Bitcoin, but it's never going to be successful enough, because at the end, the design of the Bitcoin is unique, it's optimal, and then we should not change it. And everyone who is opposing changes to the Bitcoin design, they're either doing this for their own financial benefit, or they're just bad actors, being unhappy they didn't buy Bitcoin earlier. So Hank, yeah, I don't think this will happen. And if someone wants to do it, they're free to do it. Like no one is really stopping them. I wanted also
Yeah,
to
I
make a
know.
point regarding
Yeah, please.
the quantum computing, because this guy is arguing about the quantum computing. And this is the only valid argument which we have to take seriously, and I believe the entire community is taking seriously. Because a few weeks ago, there was the first quantum computing summit happening in San Francisco, organized by Presidio Bitcoin, and very smart experts analyzed the threats. And yeah, it's a fact that we need to act. We have approximately 5 years to ensure the Bitcoin will survive the quantum attacks. And what is really interesting, that's a huge topic we can discuss separately. It's about what we should do with approximately 6.5 million Bitcoins, including the Satoshi coins that are supposed to be lost. What we're going to do with those coins, because at some point, a bad actor using quantum computing, they're going to break and access those coins. So should we try to prevent this from happening? And this is a very philosophical question. Or we just have to allow it, because
Yeah.
the Bitcoin was designed to be like not to be able to be enforced from other external parties. So at some point, you can imagine that if we have 6 million, approximately 6 million Bitcoins that can be accessed from a quantum computing attack, they can be sold, which will like damage the price temporarily, of course.
Right.
But then if we try to avoid this from happening, then we are acting against one of the Satoshi principles for the Bitcoin price to not be, for the Bitcoin network to not be um, able to change from anyone. So yeah, those are very interesting points. I think the quantum computing threat is very valid, but we still have time. One of the best minds are working towards ensuring the Bitcoin network will sustain during the quantum computing life world. So yeah, I think we're on the right path, definitely.
Yeah, you got to imagine you have people like the Lazarus Group out of North Korea are probably hoping to utilize quantum computing. Eyeing up those idle bitcoins like a Wolverine looking at a pork chop. So, but like you said, we have Presidio Bitcoin and so many others in the community that are looking to thwart those types of actions in the future. So I feel pretty safe about where we are right now and where we're going, because I think this is very much on everyone's radar. Bonds, though, does paint an interesting picture of Bitcoin's demise. Yet history, as you and I know, shows that Bitcoin has survived 474 deaths already. And we actually found the website. It's called 99bitcoins.com, where you can check out all the times people said that Bitcoin was dead. So it begs the question, Anton, why do you think smart people keep underestimating Bitcoin's resilience? We've seen it now 474 times. Why do they keep doing it?
Uh, I will quote the seller. He's saying everyone buys Bitcoin at the price they deserve. It takes time to fully understand Bitcoin. It takes time to study Bitcoin. It's requiring ambition. It's requiring desire to really understand the problem which Bitcoin is solving, and at the first place why it was designed. I think you saw what Ray Dalio, arguably the most successful hedge fund manager in the world with Bridgewater, he was saying less than 5 years ago that the Bitcoin will go to zero. This was during COVID. And right now, Bridgewater is like advising their clients to have up to 15% of their portfolio invested in Bitcoin through ETFs. And this is not like a number that I'm just coming with. Those are like official data points. So yeah, it's taking time for people to understand, but once they understand it, I can tell you, once a person understands Bitcoin, they will never go and say this is bullshit and it's not going to work. So yeah, I mean,
Yeah.
hopefully together with Zappo, we can build the right products and people can really, if not study, at least experience the power of Bitcoin and then understand it.
Yeah, and I think it's an education thing, and I love that you brought up that Saylor quote. People absolutely get or buy Bitcoin at the price they deserve, and it all comes down to when are you going to be willing to put in the time and effort to do your own research? Because once people do, Michael Saylor being one of them, wasn't always a Bitcoin proponent, did the research back in 2019, 2020. Now he is our Lord and Sailor, Michael Saylor, the godfather of Bitcoin promotion at this point. There he is. Hey, buddy. So yeah, I totally agree with you. And with all the things you guys are doing at Xapo, I'm sure there's a lot of people in our audience that are seeing you for the first time, that are tuning into the show for the first time. Where can they learn more about you and everything you and the team at Xapo are doing to make Bitcoin a better place in the world for all of us?
Hank, we're on Twitter. We are publishing regular blog posts. Everyone can check our website, xapobank.com. We are really trying to ensure the Bitcoin is going to be successful. We were established 2013. It was the largest Bitcoin custodian in the world. And again, the mission is to just help Bitcoin succeed. So yeah, just check our website, check our Twitter and or X. And we're going to be happy to interact with literally everyone watching this show. Yeah.
Love it. Anton, as always, thank you so much for taking the time to join us on the Blockchain Report today. It's always a treat getting to go over the top stories with you. And take care of that youngest Bitcoiner in the world over there, Dad. You're doing great, and we can't wait to have you back on the show again real soon, buddy.
Thank you. It was a pleasure. See you soon.
Thank you. Pleasure's mine. All right, we're taking a break, but when we're back, more top stories. And in just a bit, we'll be joined by our special guests of the day, Max Keiser and Stacy Herbert, to talk shop. You won't want to miss it. All of that coming up and more on the Blockchain Report right after this.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
All right, welcome back to more of this morning's bull run. Michael Saylor's strategy, surprise, surprise, has added another 430 BTC this week at an average price of 119K. Yeah, they literally keep buying the top like it's a corporate tradition at this point. And this time, their own manager, Shatiana Jain, leaned in to the meme, posting this on X and declaring, quote, "We'll be buying the top forever." Let's take a look. There it is. There, okay. Which is basically the corporate version of saying, yeah, we know we're the bag holders and we're totally cool with it. Now, since 2020, Strategy has amassed 629,000 Bitcoin. That stash cost about $46 billion at an average price of nearly 73K. Today, it's worth around $72.5 billion, which equals about a tidy 56% profit. So say what you want about their timing, they're still making absolutely absurd money. Now, this year alone, their Bitcoin yield is up 25%. Meanwhile, Bitcoin itself pulled back from 123,000 to, as of right now, I think we're down to 114K. We're back up. So from 123 to 114 just this month, unleashing $581 million liquidation avalanches across the market. Strategy, well, they didn't even flinch during all this, because when 71% of your company's valuation is literally tied to Bitcoin, what else are you really going to do? Sell? Playa, please. Now, Strategy has essentially turned itself into a Bitcoin ETF with a NASDAQ ticker. They raise money, issue new shares, and then keep on buying. It's less business plan and more religion with a line of credit. Now, whether Jane was joking or dead serious, the effect is still the same. Strategy will keep buying no matter what, and the rest of us will keep nervously watching the charts every time that they announce it. Because nothing says Bitcoin might correct quite like Strategy hitting buy. And Kindly MD, a NASDAQ-listed company that recently merged with Nakamoto Holdings, has decided the best use of its time is raising another $200 million so that it can buy, you guessed it, more Bitcoin. The deal closed August 15th, and it came in the form of convertible notes. This follows a $540 million private investment in public equity deal earlier this year. because nothing says sound business strategy quite like $740 million in debt instruments, all earmarked for Satoshi's magic internet money. Now, the cash will be used to purchase more Bitcoin and keep the lights on, proving once again that diversifying the balance sheet now means one asset, but make it shinier. Management says the notes give them flexibility, since they can convert to equity later and avoid immediate dilution. So basically, yes, it's debt, but it's the fun kind. Now, the move also lines up with their merger partner, Nakamoto Holdings, co-founded by David Bailey of Bitcoin Magazine fame. So now you've got a healthcare brand merged with a Bitcoin treasury strategy and run by a Bitcoin media mogul. If that doesn't scream corporate synergy, then I don't know what does. The company is hardly alone. According to the latest data, 168 public companies now hold Bitcoin on their balance sheets. Kindly MD joins the long line of firms issuing convertible and senior debt to fund these buys. TeraWulf and the Bancorp also announced note offerings on the same day, turning August 18th into some kind of Wall Street debt for Bitcoin holiday. The logic here is that convertible notes provide flexibility, potential tax perks, and the ability to hoard Bitcoin without spooking shareholders with immediate dilution. It also lets companies accumulate coins at multiple price points over time, smoothing out short-term volatility. Of course, smoothing out volatility is corporate PR for we're going to keep buying no matter how red the charts look. Analysts, well, they're a little split over this. Some see it as growing institutional confidence in Bitcoin's role as digital gold, while others warn that holding too much of a famously volatile asset might be a teensy bit risky. Success, they say, depends on Kindly MD's ability to balance its crypto obsession with its actual business and keep its capital allocation sane. In the meantime, Kindly MD is now the proud owner of more debt, more Bitcoin, and a merger with something literally called Nakamoto Holdings. What could possibly go wrong there? And Google, the tech giant that knows more about you than your own family, has officially become the biggest shareholder in Bitcoin miner TeraWulf. The company now owns 14% of TeraWulf stock, not because Sundar Pichai woke up and decided to ape into mining rigs, but because Google backstopped a massive $3.2 billion lease deal between TeraWulf and AI infrastructure provider FluidStack. Basically, FluidStack wanted a 10-year co-location lease at TeraWulf's Lake Mariner data center in New York. Google said, sure, if you can't pay, we'll cover you. In return, it got warrants for 73 million shares, which makes Google the new landlord, sugar daddy, and top shareholder all at once. TeraWulf's chief strategy officer, Carrie Linglace, called it powerful validation from one of the world's leading technology companies. Or put another way, Google thinks we might actually know what we're doing. The catch here? Well, this backstop is strictly for AI and high-performance computing leases. Linglace made it clear that it's not a guarantee of TeraWulf's corporate debt and has nothing to do with Bitcoin mining. Translation, don't get too excited, Bitcoin bros. Google didn't buy your bags. Still, the deal is huge. FluidStack exercised its option to expand at Lake Mariner with a new data center starting in 2026. And with Google covering the bill if things go south, TeraWulf gets a shot at $6.7 billion in revenue, maybe even $16 billion if lease extensions were to kick in. And that, my friends, is a lot of Satoshis. But here's the thing. TeraWulf isn't really growing its Bitcoin mining out anymore. Post-halving, when rewards dropped to 3.125 BTC per block, miners everywhere have been pivoting to AI like it's the new get-rich-quick scheme. Linglace said they'll maintain but not expand mining at Lake Mariner and instead transition megawatts toward AI and HPC workloads. Because why chase volatile block rewards when you can lock in fat, boring AI contracts with Google? Van Eck even estimated last year that if miners move 20% of their energy to AI and HPC by 2027, they could rake in nearly $14 billion more in annual profits. So, yeah, the pivot makes sense. In Wall Street, they noticed. After the news, TeraWulf stock jumped 17% to $10.57. Then it did what all mining stocks do, fell back down by the end of the day, closing at around $9.38 and sliding another 1.28% in after-hours trading. Still, since announcing the FluidStack deal, TerraWolf shares are up 72% in just 5 days. So, to recap here, Google is now the biggest TerraWolf shareholder. AI is the new mining. And if you thought Bitcoin was volatile, wait until you see what happens when miners start playing landlord for the cloud wars. It's going to get fun. And next up, Gemini, the exchange founded by everyone's favorite Facebook extras Cameron and Tyler Winklevoss, has officially filed for an IPO. The problem, they're hemorrhaging money faster than a DeFi rug pull. According to their SEC filing, Gemini racked up nearly $160 million in losses at the end of 2024. And as of June 30th of 2025, those losses ballooned to roughly $282 million. Meanwhile, revenue for the first 6 months of 2025 was only $67.9 mil. So yeah, they lost more than 4 times what they made. But hey, optimism is free, and the Winklevi are betting that the Trump administration's crypto-friendly stance and the success of recent IPOs by Circle and Bullish will give them the same billion-dollar glow-up. You see, Circle raised $1.2 billion in June and saw its stock trade 168% above its IPO price on debut. Bullish raised $1.1 billion earlier this month, with shares tripling from $37 to $118. And Gemini is hoping to ride that same wave. The exchange, founded in 2014, claims to hold more than $18 billion in assets under custody, serve 1.5 million users, and employ over 600 people. It even offers its own stablecoin and a crypto-backed credit card, because why stop at just being unprofitable once? Goldman Sachs and Citigroup will lead the IPO, which will trade under the ticker GEMI, G-E-M-I, on the NASDAQ, and some of the proceeds will be used to pay off third-party indebtedness, which is Wall Street speak for we need to plug this giant hole in our balance sheet. Now, in their filing letter, the brothers waxed poetic about discovering Bitcoin in 2012 and launching Gemini in 2014 with a security-first mindset. Now, in 2025, they're apparently hoping investors overlook the $282 million loss and focus on the nostalgia. As they put it, we are as excited as we were when we first started Gemini in 2014. Which is a nice sentiment, but probably not the line you want to lead with when your IPO prospectus looks like a financial crime scene. But we'll see how this plays out. They're both smart guys. All right, we're taking a break, but when we're back, we have our very much anticipated interview with Max Keiser and Stacy Herbert. So you're going to want to stay tuned for that and much more here on the Blockchain Report. We'll be right back after this. All right, welcome back to the Blockchain Report. It's time for a little AIO, so let's see what them computers are up to. And I've got fun news for all you parents out there. Your kid's teddy bear now spies on them and talks back too. Or it can, if that's what you're into, as a startup called Curio has rolled out a line of plush toys that are actually AI chatbots wrapped in fur. Meet Grem, a fuzzy cube alien with anime eyes, or Grok, an apple-cheeked rocket ship not to be confused with Elon's chatbot, or Gabo, a stuffed video game controller. Each of these little suckers sells for $99 and hides a Wi-Fi-enabled voice box that links to an AI model. The toys are marketed as an alternative to screen time, which is basically saying, don't give your kid an iPad, give them an iPad wearing a fursuit. Now, Grem is voiced by Grimes, Elon Musk's ex and mother of his children, some of them. She pitches it as a way for busy parents to ditch the tablet without losing the fun. In other words, outsource parenting to a chatbot that can't see you but will happily play I Spy. Now, the toys talk. They redirect kids away from bad topics like politics or cursing and beam transcripts of every conversation straight to the parent's phone. That's right. Your child thinks they're whispering secrets to their stuffed alien, but mom and dad are reading every word. It's less Winnie the Pooh and more Orwell in a onesie. Now, Curio isn't alone. Other companies have rolled out AI bears, robots, capybaras, dinosaurs, and even a ghost. OpenAI itself is teaming up with Mattel to launch Barbie and Ken with built-in AI. In demos, Gabo sat next to a kid cutting lemons with a kitchen knife and cheered him on, saying, "Lemonade time is the best time," because nothing says safety quite like an AI plush encouraging sharp object play. Now, critics worry about the privacy issues, the creep factor, of course, and the psychological effect of a transitional object that doubles as a surveillance device. Parents worry the toys might drift off script, like when one was asked about bleach and happily explained where to find it. Still, for busy adults, the pitch is seductive. Replace the morning TV babysitter with a cuddly chatbot babysitter. Until, of course, you pull out the Wi-Fi box and your kid rediscovers independent play or launches Grem into the air screaming, "TV time!" anyway. So yeah, your child can now chat with an AI-powered stuffed animal, but if you think this ends with wholesome bedtime stories, I've got a bridge in the metaverse to sell you. All right, we're taking a quick break, but when we're back, our amazing guests of the day, Max Keiser and Stacy Herbert, will be joining us live. So stay tuned. All that on the Blockchain Report when we're back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to the Blockchain Report. Right now, we're going into today's deep dive, and we have a real treat for all of you out there, as today's guests are two people who spent decades turning the world of finance upside down, exposing corruption, calling out banksters, and making economics actually entertaining. Between them, they've built hit TV shows, launched early Bitcoin investment firms, and even advised world leaders on how to bring Bitcoin into national policy. They've been on trading floors, film sets, global stages, and now they're at the center of El Salvador's great Bitcoin experiment. Fierce advocates for freedom, sovereignty, and hyper-Bitcoinization, they've built their lives around tearing down fiat illusions and orange-pilling the world. Let's give a big Blockchain Report welcome to the ones and only Max Keiser and Stacy Herbert. Welcome, guys. Thank you for joining us on the show. Our audience is thrilled to have you, and so am I.
It sounds like you have a huge crowd there.
You wouldn't know, but it's a massive audience here, and they couldn't be more excited to have you both. How are you this morning?
Doing super well. I'm so happy to be here. I saw your desk at the Bitcoin conference in Las Vegas. I didn't have time to run over there, but I know Max joined you there.
Oh yeah, Roxom has always got the best presence in any conference. I always try to go over and see what you guys are up to.
Oh, Max, you're making me blush. Not on camera. Come on, it's a live show here. Embarrassing me. You two are so interesting in this Bitcoin space, so I'd like to just get into it. You both came from pretty different backgrounds. I mean, comedy, Wall Street, and finance for Max, film and television for Stacy. Before Bitcoin brought your paths together, for people who might not know your story already, can you just give us a quick version of your journeys and how they collided into this Bitcoin-powered partnership? Stacy, I'd love to start with you.
Yeah, well, I guess my journey started in Hollywood. While I was at UCLA, I started working for a producer named Michael Phillips, who made Taxi Driver, Close Encounters, The Sting. And he was at that time partners with Michael Douglas. And his ex-wife, had just dropped a book that month that I started working for him called "You'll Never Eat Lunch in This Town Again." And if you were there in Hollywood at that time, it was like a huge, massive expose hit sort of thing. And so I was working in Hollywood and studying basically at UCLA script writing as well. And we used Aristotle's Poetics, and that comes into money because Aristotle also wrote all about money, and the principles we understand about money are still relevant today. But when I ended up working on a few films and TV shows in Hollywood, and then I moved to London in it was like 1995, right when literally the month that Oasis What's the Story Morning Glory landed. And I thought, like, why didn't I ever know about London? Why is this like, I just assumed this was always like this and it hadn't escaped out of London to the rest of the world. So I worked at BBC and all sorts of telling stories, right? Comedy as well there. Mm-hmm. And So when I went on vacation to the south of France and met Max, and we fell instantly in love. But one thing he started, he was always reading the Financial Times every single morning. And he was telling me about his days of being a Wall Street stockbroker. And again, so I'm only Hollywood. I'm working in Hollywood, working for the BBC, working on scripts. And he was telling me these stories, and I was like, no way. Like, this is not true. How can any of this stuff exist? Because the bad guy doesn't win, right? The bad guy can't win. And yet he was telling me these stories that the bad guys were winning. And so I started to read the Financial Times with him. And I kept on always pointing to him, going, "Oh my God, you told me this." He's like, "Yes, I told you we do that. This is like," and I was like, "How are they able to write it right out in the open of all this stuff going on, and yet nobody talks about it in the rest of the media?" So, like, we started making a podcast almost straight away in 2003 when we met, and this was before RSS2, so it was not called podcasting yet. And so we talked about this because I kept on saying that we need to tell this story. Like, people don't know this story of what's going on. And so we were telling that story in a podcast up until 2005 when Al Jazeera English contacted us to tell this story to the world. And so we started to make fun content for Al Jazeera about the financial world. And then the financial collapse happened in 2008. So we became instantly world famous for getting it right, for predicting it. But basically, we were just reading headlines of what was actually there in the financial world, in the Financial Times, in the Wall Street Journal. But nobody had thought to make it accessible to the world, like in a podcast sort of like normal format. We were the first to do that before podcasting really existed, right? So we made it more like chatty and talkative and fun. And of course, Max, being a Wall Street broker and a comedian, was already like great on camera.
Yeah, exactly. That's
amazing.
Going back to the late 1970s, early 1980s. I was doing stand-up in New York, and I was at New York University and taking on a lot of jobs, minimum wage jobs, and jobs to support my comedy habit. And I ended up really just serendipitously at a brokerage firm. And I really decided, or I really embraced, I really discovered that this Wall Street shtick was fascinating. And at that time, it was when the bull market was just starting on Wall Street. This was back in 1982, 1983. So I just jumped into Wall Street. I just loved the whole atmosphere of it. And you get to work during the day instead of working nights when you're doing comedy. And I brought that kind of comedy to my selling, which I did very well as a salesman on Wall Street, just because I could get people on the phone, keep them on the phone, and get them buying stuff. And then I kind of went into semi-retirement in 1990. And then I went to Los Angeles. I started a company there with my friend called the Hollywood Stock Exchange. And that's when I started getting involved in digital currencies and digital securities during the dot-com era. Then I sold that company in 2001, moved back to the south of France, and then met Stacy in 2003. And we were just immediately setting up home together. We were waiting to meet each other forever. And then we finally met each other, and we started to do content. And the interesting thing about the content was to take Stacy's kind of professional experience with the BBC and other kind of television formats and combine it with some more entertaining skills, comedy skills, this type of thing, and come up with a blend that was which was just kind of its own became its own brand, if you will, became its own style. The Max and Stacy style evolved over a few years into something very unique and very, very watchable. And then when we went over to RT and started doing Keiser Report there, and then they dubbed it into Spanish, we were the #1 show on RT English, #1 show on RT Spanish. And so we were being, seen by millions of people every week. Of course, we started talking about Bitcoin. Stacy first mentioned Bitcoin on Keiser Report in 2010 when it was 25 cents. We then started covering it really more aggressively in 2011. It was at $1. And of course, we were the only ones covering Bitcoin on international television for years. And that's how we really got to be associated with Bitcoin, because we were the only outlet, public, broadcasted global international television that was covering Bitcoin pretty extensively. We had all the early pioneers on Keiser Report, like Amir Taki was on several times. He's a very Andreas Antonopoulos, and all the early pioneers. Adam Back, I think, was on early.
Peter Todd.
And so that the show grew up alongside Bitcoin. And we, that just have been rolling with it since.
Yeah. And remember, by the way, when we, as he's describing, making those first, for the first few years of Bitcoin, there was no commentary, there were no blogs, there was no Bitcoin Twitter, there was none of that. Like, there's Bitcoin Talk, but to really try to understand what this even was. So, we were like, it hadn't yet evolved to what it is today. Like, it wasn't, we were all still feeling this giant elephant in the dark, that sort of thing of like, what is this thing? What is it? Is it a mountain? Is it a tree? Is it a stick? If you're feeling the tail, like it was hard to, have the clarity then of what we have now.
Yeah, I believe it. Your guys' story is so interesting, especially with Max's comedy background, you coming from a TV production background, meeting in France in a cafe. I'm going to be waiting for someone from Hollywood to come after your movie rights really soon, because it looks like that is a story that needs to be told. And then becoming true pioneers of the Bitcoin space. And then I want to kind of reel this back to the Keiser Report. Now, back in 2009, long before Bitcoin was a household name, looking back, do you feel like you were building the stage for Bitcoin before you ever even knew it existed? Because you two have just been so influential in bringing Bitcoin to the masses. I mean, it's incredible.
So we first talked about it in 2010, in December of 2010. So the price was 23 cents, not 25 cents. It's a 10% difference there. So, no, so we started talking about it then, and we had already been on air, as I had explained, like for quite a few years, and we were already like anti-bank fraud, like the global banking fraud. At that time, there were like giant derivatives fraud and stuff like that, and central banks. We were anti-central banks. So we had a lot of gold bugs in our audience. And we went to a lot of gold conferences and things like that. We had talked to Peter Schiff many times by that point. And so we knew all the gold bugs very well. And we had a huge fan base for our show because we exposed all these banking crimes, the derivatives fraud, the high frequency trading fraud, the central bank bailout fraud, the naked shorting of gold and silver, things like that. And then we covered Bitcoin. And that first episode, we mentioned it and we talked about it. We didn't go deep into it. But then a bunch of Bitcoiners reached out to us because of that, right? Because of that episode. And I later, years later, found out that Bitcoin Talk, like they were talking about that we covered Bitcoin on the show. So once we interviewed John Matonis, who was an early Bitcoiner, about that, like, for the first time ever, we had huge negative reaction in the comments on YouTube to the episode. And people called it a shitcoin. Bitcoin more like shitcoin, they said, which is remarkable, right? Like that now it's, but people were the gold bugs in our audience were so against Bitcoin that it became more, I did all the research for the headlines. I would look for headlines every week. And so I was just like struck by the fact that they hated it so much. And maybe I might have dismissed it, or maybe not been so curious to look into it after that, because again, like nobody was talking about it. It wasn't a thing in the world until like all of us, like early adopters, made it a thing. But at that time, like the negative reaction from the gold bugs made me look deeper and harder into it. And so when more and more Bitcoiners, or those early Bitcoiners, started reaching out to us, like Amir Taki, who was like the only, people don't know him today, but at that time he was the one that would go on the BBC or any early, new international news programs that would cover Bitcoin. He was the guy who made the first BIP. He was pretty well known at that time. So, and that's a long story before he ran off to go fight ISIS and do some other stuff. But so we didn't really know, like we were just living our space, right? Like we were creating the space without realizing it.
Yeah, like Stacy was saying, we were big into gold and silver because it's international and global money. And the show Keiser Report's a global show. So you can't really talk about one region or another. You can't just talk about New York stocks because it broadcasts to the world. So the one form of money that is global is gold. So by kind of focusing on gold, you have a frame of reference for everybody in the world knows a little something about gold or has a little gold. And then, we did a campaign in 2011 called Crash JP Morgan Buy Silver, which was a very, very viral campaign. Hundreds of people were posting videos of them and their gold stack.
Their silver
stack. And, this campaign kicked off right after the 2008 crisis and some of the mergers that went on in Wall Street. And JP Morgan ended up buying or inheriting Bear Stearns' silver short position, and they were exposed. If silver got to $50 or $60 an ounce, JP Morgan would have gone bankrupt. So we were trying to flame the fire of this massive short squeeze to take JP Morgan down. And that was also when we began to look more into Bitcoin for its really subversive qualities to exist outside of this very, very corrupt banking system. And so we dovetailed into Bitcoin from that point. And as Stacy has said, the reaction was quite negative because at that time, the gold bugs and the libertarians that were primary audience really hated the idea of Bitcoin. So it took about 5 or 6 years to get some traction in that camp. And, that's been great gaining every year. Now we're at another huge milestone with what's happening in Bitcoin around the world.
And like I had mentioned, by the way, so we had started podcasting before it was called podcasting, but this was also this crash JP buy silver, crash JP Morgan. So the act of buying silver, 1 ounce of silver, that was all we were asking people, suggesting to people buy 1 ounce of silver, and it was like $7 at that time. So buy an ounce, everybody at $7, and you'll crash JP Morgan because they had inherited from Bear Stearns that huge, massive short position. So it made it to the front page of the Financial Times. JP Morgan was forced to respond to it. But this was the beginning of social media, the power of social media and alternative media. So we were on RT, but we were being broadcast. Like most people were accessing us on YouTube and early Twitter. So like this is the beginning of the power of alternative media and social media. Like now you're used to it, right? But at that time, this was like the beginning of that sort of punching through doing a financial news report. We were the first to do it. Nobody else had thought to do it. Bloomberg, CNBC, none of those had ever covered it in this way because it was like a gatekeeper, right? They were gatekeeping this, like the propaganda or the marketing for these big banks. And we broke through that, and because of RT, because of social media though as well, and alternative platforms like YouTube.
Yeah, with markets, stock markets and financial media, there's a perception that they're impenetrable and the language is very opaque. And the class war usually positions the stock market as owned by the ruling class, and the plebs have to deal with the consequences. But having been on Wall Street for many years, as I have been, I know that the markets are easily hacked. And we're seeing that with crash JP Morgan buy silver was you're hacking the markets. We did a project called Karma Bank where we were trying to hack markets in the favor of activism. And then Bitcoin came around, and it's just another hack, really, to subvert the worst tendencies of markets and concentration of markets, to decentralize and to democratize wealth. And that's what Bitcoin represents. And so that's always been an interesting story, because you have, to Stacy's point about telling stories, you need a villain, you need a hero, you need a dramatic arc. And so Bitcoin is really the hero and the bankers are the villains. And so that's a story. And that story is much more interesting than, let's say, James Cramer over at CNBC, who simply says, buy this stock, and he, hits a tambourine or something and does something crazy. But there's no real story with James Cramer. It's just buy this, sell that. There's nothing really interesting with what he said. So how do you turn that into exciting, dramatic television is what we were able to do.
Absolutely. And storytelling is what links us as individuals, right? It makes things easier for other people to understand, which is really a credit to your guys' successes. You were able to bottle that and build this whole, media empire with just the two of you, which is an incredible feat in and of itself. So it makes me wonder, when you were back in 2011 and you're starting to bring Bitcoin up more and more, what was it like, or what were the challenges of trying to explain Bitcoin to TV producers back then, when most people, specifically, I guess it sounds like a lot of them in your comments section, at least initially, thought it was magic internet money? How did you bridge that gap?
So the audience was a lot different. It was very different back then. Okay, right now, Bitcoin. So Wall Street, and it's talked about in the Financial Times as in a positive way, and CNBC in a positive way. Back then, it wasn't. First of all, our producers, we had great producers, and we worked with a guy named Richard Dove, and then Paul Gibbs. They ran the BBC. Richard Dove had worked at Al Jazeera, and one of the comments he said to us, when we were making our Al Jazeera films, we made 10 for them, and they were all very funny, subversive, anarchic financial comedy short films. Between the shortest was 12 minutes to 26 minutes were most of them. And he said, I don't understand a word you're saying, but the audience loves it. So we're going to keep commissioning you to make these films because we don't know what you're saying. And that was kind of the attitude that we always had with our producers. Remember, we were overseas at that time. I think, in the US, maybe if the producers didn't understand it, these are very corporate, very shareholders demand, profits and all these sort of things. And it's, they're expected to, take a certain line on the goodness of certain activities on Wall Street, for example. So we were able to broadcast globally. There was a lot of competition. Al Jazeera English had set in a lot of competition in that English language global network. So we had it was a window of opportunity that we happened to be right there at that time. I think that's kind of closed now internationally. I think it's the whole market is changing a little bit. It's definitely not anarchic like it was back then, and anything goes. The producers didn't necessarily completely understand English, and they didn't know what we were saying. Yeah. We had a live show, actually, by the way, a radio show in Paris, and they didn't understand a word we were saying either. The censors there is a lot of censorship in France of what you can say. And we actually received the funniest email. This is explains that time, that period of time. In 2011, we had a listener to our program send us an email saying listening to our live show on Paris radio, Paris FM. And they were this is the most amazing show on earth. How are you even allowed to say this? Because if you're the CIA, then fuck you. So we're what the hell? We're just broadcasting live. And how are you able to get away with saying this? But our audience, also at that time, Bitcoin was very linked to the internet freedom movement. There used to be this big internet freedom, John Perry Barlow, WikiLeaks, the Anti-SOPA PIPA Act. There were this was a movement that doesn't they're not overlapped anymore. It was very aligned with that at that time. Remember, like a lot of our content, a lot of the Occupy Wall Street people came from the internet freedom sort of activists. What did they call them? The internet activists. Like there was a name for that movement at that time, but there was a kind of convergence of these different themes going on at that time that doesn't really exist anymore. But at that time there was, and that helped us with, the audience. It was a very interesting mix that the content, even at that time, was, it wouldn't have the same relevance today. People wouldn't be talking about WikiLeaks in the same way as they were talking back in 2010, 2011, or, the Chaos Computer Club and things like that were in existence back then and big culturally in the alt media space that aren't there anymore.
Yeah, that's a good point Stacy brought up. We knew the material worked because we had done it on radio and Paris Live Radio. We also had a show in London on Residence FM.
Yes.
For 10 years. And it was a show called The Truth About Markets. And when we did the first show of that show, the producer said, I'm totally shocked because I thought the show would be about farmers markets and those types of markets and the stock markets. And so the truth about markets was essentially, when you read these financial headlines and these financial publications, what's really going on, kind of like how do brokers talk about markets? It's like inside baseball or an insider view of how the people who sell this stuff every day on Wall Street or the City of London, how do they approach it? How do they talk to each other? So we kind of brought that to the fore and made it like you've got a bird's eye view into, what the approach really is. And so we knew the material worked. So the producers were not really understanding what we were saying, but they knew that the audience reaction was really big because also the 2008 crisis was an enormous punch to the gut for millions of people around the world. And they wanted to hear somebody not try to explain it in economic terms about why this happened. They wanted someone to channel their anger. So a lot of my TV appearances at that time, are characterized by me being angry and really shouting at people on television. But that was, channeling that anger that when somebody lost their house or they got wiped out because of the 2008 crisis, it's not because it was an intentional crisis, because the crisis was it was a controlled demolition, and they have the right to be angry. So that was a message that people wanted to hear. And then in Greece and in Iceland, the Troika, those economies went into free fall. And we became something like folk heroes in Greece and Iceland because we were speaking up for the communities who were being blown apart. Because in the financial world, it's easy to use extremely jargonistic language and obfuscation to hide what is essentially larceny.
It's also important to note, like we had made before Iceland was the first country to go under before Chancellor on brink of second bailout for banks. It was Iceland had collapsed, and that was in 2008. And we made a film about Iceland in 2007 for Al Jazeera. And Max said it would blow. He said the entire economy would blow. But at that time, at that very same time that we said that, the BBC, all the European media, everybody was talking about the miracle economy of Iceland and that Iceland would buy up all of the UK because they were buying up a lot of the high street at the time. But Max said it was going to blow. So all of our content we were the only people in the world doing this. So when everything blew, that's when you see all these clips of Max on the BBC and Channel 4. They didn't have one single expert lined up, like an establishment expert to explain any of this stuff. Max was the only person that had predicted any of this stuff or who had talked about any of this stuff. So when things like CDOs and stuff like that were blowing up, and they didn't have, maybe they were Googling and looking for an expert who could talk about this and what went wrong. Like we were the only ones that had covered this. And so they had no choice but to come to us to ask to explain to, the mainstream audience like what had happened. And we were also covering Bitcoin, so you'll see some early BBC was actually earlier than any US press in terms of covering Bitcoin because of us, right?
Yeah.
Because Max was there on their show.
Right. So we were like the Big Short, for Iceland and Greece before the Big Short, hit the US. But another dynamic, which is, I think, key here, is that we were in Paris and we created a very strong relationship with the Associated Press, who had a bureau in Paris, and their main operations were in London. And so I talked to the Associated Press, and I said, you have me up here every once or twice a week, and I'm giving my sound bites for these international news shows. Why don't you just create your own show right here in the studio, half-hour show, and sell it as content? It's an unused space, and just have me or us on there for half hour and sell that.
And we at that point, Max, before we did Keiser Report, he called himself a financial war reporter. So AP, like the guy who ran Paris AP, had been a war reporter in Sarajevo, right? Like, so he talks about being shot at and all these sort of things. So to them, they're all like rugged, sort of like, chain smoking, like, frontline sort of guys. And they were just like, are shouting and screaming and doing all that stuff. That was just like, that was all normal to them. Like, so had we been in the US at that time, I don't think we would have done what we had done, because you had to have these sort of European sort of AP hardened, like war reporter sort of people around us, and the BBC, like the same that Richard Dove and Paul Gibbs were.
Well, the market had changed because Al Jazeera English introduced a scrolling English-speaking news channel, suddenly the first in the world outside of the BBC and what you would see in the United States. And this set off a chain reaction in countries around the world that they launched 24-hour scrolling news channels. And so we were in Paris, and we were with Associated Press, who knows all of these channels. And so then we started producing our show there, and Associated Press essentially produced these shows. Like the Keiser Report is produced by the Associated Press and then sold to RT. And this was the pattern with all the other global outlets that have bought shows from Max and Stacy. They're buying them from the Associated Press. And we essentially worked for the Associated Press. So that gave us also a lot of cover going into with RT. When we started working at RT in 2009, the Cold War had ended. And Putin was with Bush, and then comparing toothpaste at Camp David. Like there was a rapprochement. There was complete, no problems at all.
And we actually said at the time, it was like, this is going to be better than Al Jazeera, because when we were working at Al Jazeera, there was a memo, the Downing Street memo, that had leaked right when we were working there. We were in their launch week, right? Our program, the content that we made for them was in their launch week of the English language channel. And then it also, at that same week, the Bush-Blair, the Downing Street memo came out where Bush and Blair had talked about bombing Al Jazeera. And we were like, it was stressful, right? We were like, oh my God, we're going to be bombed. And then when we started working for RT and say, we were like, this is going to be easier, because they're friends.
They're friends. So, and then during the course of our 13 years, at RT from 2009 to 2022, like every year, like it began to become the Cold War, it was warming up. And like every 6 months or every year, we'd be talking to AP and say, are you sure you got this under control? Like we don't want to be on the wrong side if the war starts. So then finally in 2022, there was, a war did start. So we had to step back.
Caused by Hillary Clinton, of course. Everything was all down to her losing and refusing to accept it.
Yeah. So, so that kind of brings us up to the present. So then Stacy really had this idea where, after meeting the president of El Salvador, President Bukele, in late 2021, we met him, very impressed, and they had made Bitcoin legal tender. And then we came back and we thought, well, they'll probably just go down the path of shitcoins. And Stacy was like, you know what? I can't accept that. I can't accept it. This country deserves better. So she reached out and said, look, you've got to not do this and you can't do that. You've got to get this Bitcoin thing right. So they were like, wow, okay, come on back. So we went back and sat down with the president, and he invited us to essentially be policy advisors on Bitcoin in El Salvador. We decided to create the Bitcoin office. Stacy's heads up the Bitcoin office. We started the Bitcoin Strategic Reserve, again, mostly through Stacy's efforts. And we just passed the Bitcoin Bank Law, which I must say, hello? Did we get lost?
No, I hear you.
Okay.
The
Bitcoin Bank Law, which again was primarily Stacy's effort. So that's been really the project for almost 4 years now, and I think we see the United States kind of following El Salvador, right? They want to do a strategic Bitcoin reserve and other stuff.
Yeah, and Stacy, as the director of El Salvador's National Bitcoin Office, you focused heavily on Bitcoin education, which all Bitcoiners will tell you is maybe the most important thing for adoption. We're seeing it time again. People don't believe in it, they do the work, and then all of a sudden they orange pill themselves. How big of a difference has that focus on education made in shaping the next generation of talent in El Salvador?
Well, it's my firm belief, and I've posted this several times on Twitter, is like, or X, whatever. It's education is our moat, right? People naturally want the quick, easy, fast path to the top. I'm finally seeing what we look like on the screen. Like, we had a pop, our screen popped different, and now I can see I'm kind of out of shot. Well, education is our moat. It's hard work. It's really difficult to do. And again, just like early Bitcoin, there was no roadmap or template or like work that we could just, take from somewhere else that had already been done. We had to build it from scratch by hand.
Right.
And so we've been working on that for 4 years. We have like even down to 6-year-old children, 7-year-old children. We now have a workbook for a school book for 6 and 7-year-old children, 8-year-old children. So second and third grade, completely done, introduced into the schools in El Salvador, the public schools in El Salvador. We have a Bitcoin diploma program for high school students. But the first thing I did was the Kubo Plus, which is a Bitcoin and Lightning devs program. And why I started that is 4 years ago with Jimmy Song. Let me roll back a little bit. So Max and I were in El Salvador, and we were trying to find a way to help, like how to help El Salvador. And the first thing we did was, we were early VC investors in, in the Bitcoin space, like Kraken, we had invested in like 2011 or 2012. And we have a high tolerance for risk, and we've been around for a long time, and we could give back. Let's start investing in startups here and bringing companies to El Salvador, bring Bitcoin companies to El Salvador. And, we always got asked like, well, what's the talent pool like there? Like, how many Bitcoin and Lightning devs do you have? And of course there were not that many, and there were mostly foreigners living there. And I really believed, and we had been talking about it on our podcast, Orange Pill podcast at that time, all the time, that Bitcoin would cause a renaissance somewhere. And we had talked about it on Keiser Report back in 2014, that, perfect money could cause a renaissance. It did in Florence, I believe. And I believe that Bitcoin could cause a renaissance somewhere. So I believed that something great would come for El Salvador, that the economy would transform, that it would boom. And this was before the gang war, which did transform everything beyond anything that I expected at that time when we first arrived in El Salvador, in such a positive way. that but from where we were at that time, I was thinking that we need to train our Bitcoin and Lightning devs. And so I got Jimmy Song to come there. And it was so much hard work because his programming Bitcoin course, it's very difficult to get in because he asks this one question, and it's it shows how you think rather than your skills. And we interviewed something like 150 students, and we got 7 in there. So I was a little bit like discouraged. I was thinking like this was going to be a difficult task, but we trained those first 7 students, and Jimmy said to me, like, if you can get 20 students trained up like I've just done for your students here in El Salvador, if you can get 20 more, then you're going to transform this economy. That's all it will take. And so then Jimmy was gone, he has his own life. And I was thinking, wow, I really have to I need 20 more students. So I started out thinking I need 20 more students. I met with this company called Folger, who are huge investors in the Bitcoin and Lightning space. They're a VC fund. And they got on board and wanted to help, with building out Kubo Plus. And so they were great partners and brought in Giacomo Zucco. And we now have 500 students that we've trained in El Salvador. Wow. So, it turned out to be better than I ever could have imagined. And so this is our moat, because I think, countries are looking at Bitcoin, and what they're only looking at one thing, right? They're looking at just Bitcoin. They're just looking at a strategic reserve. They're just looking at it in that sort of way. Whereas what El Salvador has is so deep and so profound and so, mindset. It's all about the mindset and about being Bitcoiners. Like, you have a population of Bitcoiners there, in a way that it just takes the time that it takes to train these hundreds of people, to train, to have that shift in mindset across the whole population of what it means to be like sovereign and independent, truly, right? It's a bit deeper than most people realize. A lot of people still have just the fun of like number go up, and that is fun. Right. One can't deny that, but it's there's so much more in a deep Renaissance like level that's where El Salvador is. And I think therefore it's going to be hard for any country to catch up, because because El Salvador has President Bukele, and he is a 1 in 500 year type leader, but the population as well, not only do they support him because he is a great leader, but because he brought them freedom, not only with Bitcoin, right, but freedom from all that terror of the gangs, right? So you have a population that is so optimistic and so like, say, 1960s America, where they thought like we could land a man on the moon, we could do anything, right? Like the future belongs to us after World War II, like everything is going to be American. So we have that same sort of enthusiasm for the future and that optimism for their future across the entire population that you just don't see anywhere else in the world. There's more of a, like, we're heading into the fourth turning and it's getting horrible and like every man for himself, where you don't have that in El Salvador. You have a mindset of sovereignty and independence and good times coming, right? Strong men create good times.
Yeah. And Max, I wonder from your perspective, as both of you are so integral in writing this new blueprint for El Salvador of how nations should start adopting Bitcoin into their monetary policies, how far away do you think we are from seeing other countries follow suit, specifically the United States? Are we still years away from that? Is it maybe a lot closer than you think, or than we think? What are your thoughts?
Well, having President Bukele as president of Bitcoin country is helpful because he's the most popular leader in the region. He's the most popular leader in dozens of countries. When they ask them, who's your favorite leader, they'll say President Bukele. and President Bukele, of course, is associated with Bitcoin. So that opens the doors. And we recently met up with the folks in Panama, and they are now moving toward what I call the axis of Bitcoin, right? Central American companies and countries that are coming into Bitcoin. We had a meeting with the financial minister of Pakistan a few weeks ago with the president. And the news came out shortly thereafter that they're now exploring Bitcoin strategic reserve. So every country in the world, every sovereign wealth fund in the world, and sovereign wealth funds, the biggest ones are the biggest part of a few of these countries, they're now exploring Bitcoin or investing in Bitcoin. So it is now finding its way into the sovereign level. So Bitcoin is definitely embedded in the sovereign level, and they are increasing their allocation, just like Larry Fink, I believe, allocation went from 1% to 5%. Now he's talking 15% on portfolios. So the hedge funds, the managed money world, they're upping their allocations. The sovereigns are getting involved. Sovereign wealth funds are getting involved. So it's already on the sovereign level. It's already working its way in. We believe we have a blueprint for this that was developed in El Salvador. The legal blueprint, the communications, how to manage it. So that's something that we've talked to Panama about. Like, here are the steps we took to get to El Salvador level. We think El Salvador is the first country out of the fourth turning, in large part because you've got President Bukele plus Bitcoin. So, we're already in the good times phase, and other countries are entering the bad times. In the United States, of course, they are very involved with Bitcoin thanks to the orange pilling efforts of Bitcoin Magazine in the Trump administration and family. So they are definitely on the Bitcoin board. And so they are obviously a big player. They're probably the biggest of the G7 that's involved in Bitcoin. And, I think you're going to see some news coming out of the Mideast. It makes perfect sense. They've got all that energy that they would want to also be in Bitcoin. We get some news still coming out from that region, and so it's already happening on the sovereign level.
That's amazing. And when you two aren't orange pilling, countries, you're also helping orange pill the world with your very appropriately named Orange Pill podcast that we touched on a little bit earlier, which has become an absolute hub for Bitcoiners worldwide. I would love to talk about that a little bit. And for those people that aren't yet familiar with it, Stacy, can you tell us a little bit about the vibe of the show and why you decided to create it in the first place?
We created Orange Pill Podcast during the lockdown, the global lockdown, right? For the COVID pandemic. And everybody had a lot of time on their hands suddenly.
Yes,
and
we did.
It was a real turning point for everything, right? Especially for Bitcoin, because remember, they turned off the global economy. And that was like, so everything around us is just a hologram. Like, we don't need this economy. We don't need jobs. Like, we could just turn this off. Like, what have we all been doing for all these decades? Like, what is this? Right. And remember, Bitcoin crashed like from, I don't know, it was like 6,000 and then it crashed down to 3,000 in that one day in March, until, thank God, BitMEX like shut down for a few hours and it stopped whatever derivatives or leverage was unwinding. And it was a crazy time, right? And we needed to try to communicate with the world. We wanted to like talk to people and help people, because I knew a lot of people might not be in the same position we were. And we had each other. We had a nice, safe place. We had a lot of space. We had a lot of green and like fresh air and sunshine. And so it was part concern for our audience already. Like, let's talk, like, we're here, like, let's have fun. And a way to fill some of the hours of the day that we suddenly had, that we weren't doing other stuff. But it was totally free form. It was unscripted. All of our stuff until that point had been mostly scripted, except for Resonance FM, the Truth About Markets. So it's back to like where we started in terms of Truth About Markets, riffing on topics of the day and things that were happening. And it was also at that moment. So when we realized like everything was a fabrication, like Bitcoin to me in March of 2020 became way more serious to me than it had ever been. Like it was like magic internet money for a long time to me. And, I remember like giving away lots of money, Bitcoin, and spending Bitcoin and thinking like, hey, this is just like magic internet money. And I had spent like 14 Bitcoin on an iPhone. And I was like, oh my God, I can't believe Apple sent me an iPhone for these Bitcoin. This is crazy. Like, I was, I had been just commenting and having fun with Bitcoin. And then when they shut down, they just not shut down, they turned off the global economy. It was, and in the United States, we were, being pushed money. Like our banker was asking us like, oh, you should, here, take $2 million and you don't have to pay it back. And, I was like, well, this seems like one of those Nigerian prince scams. Like what is going on? Like what they were pushing it on us. And then they sent us the application form or some form to take $2 million for free. You don't have to give it back. But the front page was literally just a few words. And the front page said, by taking this, you agree that if you didn't take this money, you would go bankrupt. And it's a felony if that's not the case. So I was like, well, then it's not free money because we wouldn't go bankrupt and without this money. I would love $2 million to buy $3,000 Bitcoin, right? But so we didn't take the money. But I just thought I felt like it was very aggressive being pushed all this free money that in fact you're going to be committing a felony. Now take it. And you're like, what? Like this is weird. And so we were it was very anarchic and fun. And we talked a lot about what then would end up happening to us the next year, which was we were talking about Renaissance. So we were talking a lot about a Renaissance 2.0 coming because, of course, these were the darkest of times, right? The Renaissance 1.0 came out of the Black Plague right after that. And so we had already been talking about how perfect money could transform an economy, but now we also had this is like a global reset. They just turned off the last simulation and it's time to build a new simulation, right? Like when they turned off the money and they turned off the economy, it changed everything. And we were there with the Orange Pill podcast to try to understand what it was. So it was very anarchic and fun and, trying to make sense of the insanity all around us. Everybody went crazy. The whole thing was still quite inexplicable of what actually happened.
Yeah, sure. Remember they had the truckers in Canada, they were being debanked and people were being debanked. And that was a phrase that most Americans had never heard of, or even the Trump family got debanked. And apparently that's what orange pilled the Eric Trump and other Trump family members, is that they see that when you are able to cut somebody off from their bank, you're controlling them. So that was the use case for Bitcoin, for uncensorable transactions. So that was, gave some thrust to the Orange Pill podcast because it's part of what we've been saying for years now. And I mean, that's when we've always had the wind at our backs, because when we started talking about it, we kind of nailed it, the use case, what it was good for, very early. And we've just been sailing on this for 15 years. Like everything we've been saying for 15 years has been true and accurate. And the need for it has been legitimate. And the fragility of the existing system is now evident, and it's breaking apart. And now the need for Bitcoin has never been greater. And so we're entering into another chapter, which is going to see, I think, some pretty significant changes. But we'll be here, reporting on it.
Yeah, those times are really wild. You think about it, it was kind of the perfect cocktail that was just waiting for someone like the two of you to take advantage of the situation. We had everybody stuck at home. We had the rise of TikTok. All of a sudden, everybody gets all this stimulus money. We had the gamification of stock trading and crypto trading via Robinhood kind of exploding at that time. And all these eyeballs are looking for somebody to look, to tell them and give them answers. And you two positioned yourself so smartly right in that perfect storm. And then you have Max. What I really love about you specifically, and I love you both, you are such a showman. And you two have done such a great job of marrying the ideas of financial information and entertainment into financial entertainment. And you are so well known for some of your, what some people might call outrageous predictions or hot takes. For instance, you've recently predicted that Bitcoin will reach $2.2 million by 2025, citing US debt and inflation. Now, when you make calls like that, what do you feel like you're seeing that a lot of other people still are missing at this point in time?
Well, I didn't say 2025. I just said it's in play.
Right.
2.2 million.
Thank you for correcting me.
Is in play. It's easy to see where this is going, and so it doesn't seem like a stretch. The total addressable market is 400 trillion. The total addressable, all the fiat money world, it's literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now, there's I believe, an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model. After 300 years, I think this is all coming apart. And Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there, because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going, and they can't make any more of it. So it's not hard to come up with these numbers, and we've been right. I mean, the only really important price prediction I ever made was in 2011 at the first Bitcoin conference in Prague, when Bitcoin was a few dollars. And I said in my speech to the conference that if this works as an asset class and captures 1% or more percent of global Forex, then this is a $100,000 per coin asset. Okay, that's really the only important prediction I think that I made, because obviously if you were riding it from $1 to 100,000, you got the lion's share of gains in this asset. And to give credit, it was also Rick Falkvinja who started the Swedish Pirate Party, who was also at the event, who also did a presentation along these lines as well. So he was really also really seeing the potential of Bitcoin at that time as an asset class and being competitive in the global asset world, where I know as a stockbroker, you have a fiduciary responsibility to at least consider these assets. And if it pops up on your Bloomberg machine, it's going to gain traction, and the market's huge, and the price is gonna go up. That's it.
Mm-hmm. And you mentioned Michael Saylor, and we'd have to talk then about strategy and what's going on right now, as they've certainly seemed to be the leader in this new narrative that we've seen this year with the Bitcoin treasury companies. Stacy, I would love to know, what's your take on that? Is that sustainable long term? Because not every company is strategy and has been buying since 2020, and we're seeing all of these new entrants into the space. As a Bitcoiner, I love to see it, but I wonder if you think that is really sustainable for any company that wants to hop on board the Bitcoin treasury train.
Well, there's a few things. For me personally, I only look at Bitcoin as something that should be owned by the individual or the nation state at that level, for sovereignty, for purposes of sovereignty. I had mentioned at the top of this interview that, I know the number go up thing is fun and things like that, but I think sovereignty is the most important issue. And I think everybody out there should focus first on acquiring as much Bitcoin as they possibly can and hold it, own their own keys. Now, these Bitcoin treasury companies, again, so we were doing the Orange Pill podcast. It was the lockdown of 2020. And we had just started our Orange Pill podcast, and they had turned off the global economy. And I think once they turned it back on, apparently we were all replaced with AI, of course, since 2020. But to me, like what Michael Saylor did with strategy was MicroStrategy at that time. It made perfect sense as he was describing it at that very time. What he said was that the cash on his balance sheet was a melting ice cube, right? And that made so much sense, especially at that time, because they were printing trillions of dollars and sending everybody free money, like enormous amounts of free money. We were being offered 2 million free money. So at that time, when he said, hey, this is a melting ice cube, you're like, yeah, like, I can't believe all the money we're being offered. It's crazy. So cut to today, and it's, I don't want to use this word necessarily. Okay, so like a cargo cult, right? What a cargo cult does is, if you've ever heard that term, is after World War II, when the U.S. military left this remote island in the Pacific, and they had a U.S. Air Force base there, and they would bring in all the planes and deliver all these goods and amazing goods and food and packages of stuff, and like then the U.S. military left, and the local population still there were like, well, how do we get all that food in those boxes? So they took the things for the planes, and they started like just doing this and thinking like if they were going to direct a plane in, that's what brought the food. It was just that. So I think like there's an element of that, of like they've stripped down what Michael Saylor and strategy has done to just like doing that, just the magic bit, the magic internet money sort of bit of like, oh, if we just do that and don't have an operating company and don't have like a melting ice cube on our balance sheet that we're trying to protect, that it's then about something else. Is not exactly what MicroStrategy was doing. On the other hand, as well, like if we're at an end of an era, pre-World War II, you had the same exact thing happen in Germany, which was the speculative attack, right? On the Reichsmark. So anybody who was doing the same thing of borrowing as much as possible in the collapsing currency and buying gold or assets at that time, if you had access to the capital and you could acquire as much of Reichsmarks as possible, it was a very smart thing to do. So this is in danger, I would think, of triggering that sort of collapse of this whole fiat system, not just the dollar, but the dollar is the fiat system, right? That all the other currencies are just kind of like the altcoins of that space, of the fiat space. So I don't know. It's positive and negative. It's complicated. I think there is a sort of South Sea bubble. Like if you ever see the Hogarth sort of artwork from the South Sea bubble era, like they would have signs out in the middle of the square in London and say like, here, invest in this company. We haven't decided what we're going to do yet in the South Sea area, but we're going to do something. Like, we don't know what our venture is, but it'll be something. Just give us money. There is an element of that, but there is an element of a speculative attack, which makes perfect economic sense at this sort of moment. Yeah. If the fiat system is going to collapse, which it very well should do if you saw what happened in 2020. So it's complicated. I just focus personally on the message to our audience is that stack as many sats as you possibly can. Buy Bitcoin, not exposure to Bitcoin. And at the nation state level to, especially if this whole fiat regime is going to shift and there will be a monetary reset. And I think there's an ongoing monetary reset. And I think it makes sense for a nation state to protect itself, to stockpile Bitcoin, to develop a strategic reserve. but yeah, uh, that's the message is buy Bitcoin, not exposure to Bitcoin for most people.
Yeah, absolutely. Not your keys, not your coins. And Max, in terms of the Bitcoin treasury plays, obviously with that narrative been going on the last year or so, we've seen it definitely help channel Bitcoin's message to the masses, right? But I worry if we see a bear market and we have companies that didn't buy in at an average coin of 73K like Strategy did, we could end up taking a big step backward. At the end of the day, do you think this corporate treasury play is going to be kind of a 2 steps forward, 1 step back for Bitcoin? Or if we do see a big bear market with a correction as a result of maybe the collapse of some of these, could this end up actually hurting Bitcoin's narrative in the short term?
Well, the primary use case of Bitcoin is separating money from state. So when corporations are buying Bitcoin and you're buying shares in those corporations, you're reuniting money and state. So it's going backwards from the primary mission, right? The vector that it's on is to separate money from state. And it's as profound a change to society as separating the state from the church, right? That was an amazing leap forward for humanity in a lot of ways and gave us the Enlightenment. And separating money from state is sets the stage for something similar to happen to society, a huge leap forward of self-sovereignty. And that would be self-hodling Bitcoin. On the corporate treasury front, you've got a lot of companies with a lot of cash who are buying a lot of Bitcoin. The thing about Michael Saylor is that back in 2020, he had $500 million on the balance sheet, and he could have done what every single CEO in America has been doing for 20 or 30 years, and that is to buy back his own stock. That would boost earnings per share, which would make his stock options go higher, and he could make a lot of money that way. But he took the very bold step of trying something no one had tried before and done before. He put that $500 million into Bitcoin, and he set in motion something that has profoundly changed corporate finance. So the melting ice cube was addressed. He went from the problems with fiat money to Bitcoin. Then the next step was, you know what? I can actually go into the market and sell stock, and I can sell bonds, and I can use the proceeds to buy Bitcoin. So then we went into this idea of dilution equals accretion. Because normally when a company sells stocks or bonds, you're diluting the earnings per share, and therefore the multiple would drop down, and so would the price. So he's saying, no, actually dilution, and with our company, it's accretive because we're going to instantly buy Bitcoin, and Bitcoin is going up forever. So that's the beginning of his at the market stock sales, etc. And stock is looking good. It's getting a lot of attention. Then he goes into another phase, which is these convertible preferreds and other kinds of stock offerings that would appeal to different pockets of money. Some are looking for volatility, some are looking for income. And he had the biggest IPO of 2025 so far with one of his spinoffs. And that money is going into the balance sheet, and he's buying Bitcoin. And I think that Michael Saylor is a one-off, just like President Bukele is a one-off. I think that these other companies that have come along that are trying to do what he's doing, they don't think they know what he's doing, but they think they know what they're doing and what he's doing, and they're not necessarily going to be successful at it. And they've already said that if their stock price trades at a discount to their Bitcoin position, they're going to sell their Bitcoin and buy back their stock. So it's going to unwind those positions, where they don't think Michael Saylor and Strategy would ever do that. But these newer companies have already said they would do that. So what you have here is the makings of another blow off top, because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And then the cycle will begin again. This idea that we will no longer, we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. So as a Bitcoiner, I like to see the demand for Bitcoin.
I think one more thing to add to this is the altcoin treasury companies. I'm saying the polite word for that, but I think those will be, that's where the disaster will happen. That is the liar loan of this cycle. They are the liar treasury companies essentially. It's remember the 2008 financial crisis was caused by liar loans being at the foundation of these CDOs and these mortgage-backed securities, that they had all these liar loans underlying the asset, which was being packaged with some treasuries to make it look better than it was, and sold to pension funds around the world. And but at the very foundation of the whole thing were these liar loans. And that's the fact about the 5 million altcoins, is basically they're liar coins, right? And if you're having that as your foundation for these packages of securities and products being sold to Wall Street and to retail investors, that's going to be where everything blows up, in my opinion. And there could be some contagion into the Bitcoin treasury area, I would suspect. Again, but this is the first interview I've done in a long time, and these are just like some thoughts. Everybody really has to do their own research on this space, and there's plenty of research on Bitcoin and holding your own Bitcoin, and that's at the end of the day the most important thing for you to go down that rabbit hole rather than worry about which company is going to crash first.
Yeah, you've removed one of the charming aspects of Bitcoin is you don't have to follow the companies and all the risks that come with owning stock in a company, the management risk, the regulatory risk, the market risk itself, and the competitive risk. These are risks that these companies deal with every day. Sure. And so on a risk adjusted basis, just owning Bitcoin, you don't have any of that risk. And you've got still a Keiger rate of, I think it's still like 50% or something very, very high, which is beating every money manager in history. It beats Warren Buffett by like 2 or 3x. So what more could you possibly want? One interesting side note, which I take as signal, and it's very interesting, is that gold mining companies are now putting a portion of their treasuries into Bitcoin, right? So you see that Bitcoin is demonetizing gold. You see that gold ETFs are being sold off to buy Bitcoin ETFs. Gold mining companies are buying Bitcoin on their treasury books. So that is a clear signal that gold is in the crosshairs. Gold will be demonetized. And that puts you at 800,000, 900,000 per Bitcoin, because gold is now $21 trillion asset. So that's the bull story right there. Corporate treasuries are bullish. They're buying a lot, but they're doing, obviously, Wall Street financial chicanery that we've been reporting on for 20 years. It always ends up blowing up every cycle, and then we'll see another blow up in this cycle.
Actually, Max brings up a good point there about the gold companies buying Bitcoin with their reserves. That's an interesting thing to me, is the commodity companies, right? Because those are hard assets. So what are they doing with their melting ice cube, right? If they en masse start, like the oil or energy companies and the gold or silver mining companies or the copper mining, if those companies start holding their cash reserves in Bitcoin instead, that's a different sort of signal than the speculative attack sort of model that we're seeing at the moment.
100%.
Yeah, and it makes sense to me that they would want to keep their treasury, their cash holdings in Bitcoin. To me, it seems obvious, and I think we've said that long ago about the oil companies or the oil countries like Abu Dhabi, that they should be holding gold, Bitcoin instead. So that will be an interesting move, and there are the first gold companies starting to do it. But once you see the energy companies, that's going to be the real mind shift happening. The mindset is shifting radically in the markets if that happens.
Yeah, because right now people focus on cost of energy for mining Bitcoin,
Yeah.
but they haven't really grokked this idea where energy companies will be buying Bitcoin in the open market, like Aramco, for example, a huge company, hundreds of millions of dollars worth of that. They've got tons of cash, and they are now selling bits off in the public markets, and they've got a lot of cash. And if they said we're going to start buying Bitcoin aggressively, that would trigger an avalanche of buy orders.
That's so true. And it's interesting too, like you said, with gold buying Bitcoin, it's almost kind of akin to like if Coca-Cola started buying Pepsi. It's almost admitting that this has its own advantages over what you currently have. So you want to talk about a signal, that's almost the signal. But when we're talking about gold too, and that's kind of been Bitcoin's narrative for a long time, right? It's the digital gold, it's a digital store of value. But as we progress through this journey that is Bitcoin, we'll have plenty of people out there. For instance, Jack Dorsey's been on record of saying that in order for Bitcoin to truly reach its destiny, we need to be using it as a payment-to-payment system. Do you agree that that is going to be a necessary step during Bitcoin's evolution, or will it always be able to live as just another harder store of value?
All stores of value, all money starts off as a collectible, and then it becomes a store of value. Then it becomes a medium of exchange. Then it becomes a unit of account. So we're in the process of the store of value story getting traction globally, and the medium of exchange story is also gaining traction.
I also think just having lived it and experienced it and observed it and regretted many things is like spending a Bitcoin back in 2010 or 11 or 12, is that it seems like the design of Bitcoin is such that it is what it needs to be at that moment to get maximum distribution. So Bitcoin found us. We were one of the most widely distributed financial news programs in the world on a platform that was already attracting contrarian thinkers, right? So they weren't orthodox thinkers who wanted to hear that how great the banks were and Wall Street and how the system would continue as is. It was already naturally, our audience was already naturally like inclined to think something's wrong. What the heck is going on out there? So if we had the right audience, now Bitcoin at that time was so abundant and so easy to get. And people probably have heard this, these sort of tweets go viral every once in a while, that there used to be these faucets where you could get 5 Bitcoin for free. All you had to do was put in a Bitcoin address and they would send you 5 Bitcoin. I made lots of Bitcoin that way and gave it away to friends and family. And, it seemed so easy at that time. So like, what it does to your psychology is like, oh, I got 15 free Bitcoin this week from the faucet. So here, friend, take 10 Bitcoin. I'll just get some more next time, next week, so it seemed easy. And so you were distributing it easy. And of course, that free Bitcoin came from Matti Malmi. It came from Gavin Andresen. They each had a faucet and they gave away 30,000 Bitcoin each. So I'm sure, it doesn't feel good today to look back and think, wow, I gave away those 30,000 Bitcoin. But at that time, that was a psychology. It was like an evolutionary sort of tactic for Bitcoin, because had they kept it and had there only been like 1,000 people in Bitcoin or 500 people in Bitcoin as there were back then it wouldn't be what it is today, right? So they had to spread it. They had to give it away. It had to be distributed to Argentina, which was a big early adopter because of their financial crisis. It had to be spread around the world as far as possible. So it does seem like almost by intelligent design, right? That it found, people giving it away who didn't realize that they were giving away such a valuable asset that they could never get again. It tricked, like that's what evolution does, right? These are evolutionary tactics that trick like some sort of parasite to take your barnacles off the whale. Like, they designs things to work perfectly in a harmonious system and survive and thrive the best. And it found Keiser Report, which has the right audience to distribute it the most widely. And so right now, it's telling people to stockpile as hard as possible. And I see why Jack Dorsey, he was at an event that we were at. He spoke at an event in South Carolina. And he mentioned that he first got involved in Bitcoin on October 31st, 2008. So that was like at the white paper was published, and he read that. He downloaded it that day. So he's an early Bitcoiner who was around at that time when people were giving it away, spreading it wide. And so when you see it now that nobody spends it, nobody invests it, nobody, I could see why, like where he's coming from, the context for where he is that he was there when people were spreading it around. And, he does a lot of amazing work. His stack that he's developing for Block is pretty impressive. And he's very generous with his Bitcoin and all sorts of programs in the developing world. And so I think, he has a lot of Bitcoin. So I think probably it's him trying to encourage his, other OGs and whales to keep on building and spreading the Bitcoin rather than hoarding it on these corporate treasury balance sheets. That's where, we're having been there in those early days. I imagine this is where he's feeling, anxiety about this, but I just think Bitcoin is where it has to be. It tricks us all the time. So I'm sure, there will be the same sort of feeling maybe one day of people saying, I created a Bitcoin treasury company instead of doing this. I should have been doing this at that time, right? So who knows where it will go from there. But I understand, and I agree as well with Max that maybe it needs to be $1 million a coin or 2 million, or we don't know until it gets there, until when people start spending it, but they have to be earning it. As long as we have a fiat currency, that Gresham's law would suggest that people are going to spend their shitty money instead, right? So you're always going to have that problem is now that people realize that Bitcoin is perfect money, but they have an imperfect money and a crappy money to spend, they're going to spend the one that's trash, right? You have to, either the price has to be higher, people have to be earning more Bitcoin as a salary, so that they don't even have the option of having fiat to spend, to get rid of that psychology. It's all about psychology, right? Markets.
Yeah, no, the psychology element to it never ceases to amaze me. And like you said, we had people back in the day just giving it away. At least we're not calling them the pizza guy. He's got it worse than anybody. Now everybody knows who the pizza guy is. But in terms of in the future, actually using it as a medium of exchange, Max, to your point earlier, what do you think is the biggest barrier right now for people doing that? Do we need better and simpler user interface maybe? Because I know my Mima is not going to be paying for anything, with her cold wallet. What do you think needs to change in order for Bitcoin to be adopted more as a medium of exchange as we move forward to the future?
Oh, those payment systems are coming along every day. QR codes, payment codes, they're always new ones all the time. So it's definitely gaining traction on the payment side. And people are just going to take it at their own pace. And generally, the adoption is driven by crisis. And if we have another bank crisis, then another huge wave of adoption will happen. And also, you have these circular economies. So in El Salvador, in towns like Berlin, and there's a couple of more, where people are earning, spending, and saving in Bitcoin. So everything is Bitcoin. And it's a circular economy. And so you already see those pockets happening in towns all over the world. And so when they start to commingle and they start to merge into bigger and bigger regions, then you go into a circular global Bitcoin planet.
It's also the businesses. All these cafe. If I had a business and I was selling something, if I had a shop and I was selling something, and you see these countries developing strategic Bitcoin reserves, and you see all these the best and brightest, the smartest people in the room, creating Bitcoin treasury companies, and you see this speculative attack, and you see the largest financial institution in the world, the BlackRock, like has tens and tens of thousands of Bitcoin, hundreds of thousands. It's like,
right.
If I had a shop, I wouldn't have like, here, this is $20 or $20 worth of Bitcoin. I'd be like, okay, no, it's $20. Or if you give me $15 worth of Bitcoin, I'll prefer Bitcoin. Like, they're the ones that should be driving this. Like, because it doesn't make any sense for you if you have, Cash App. Okay, you could spend dollars or you could spend Bitcoin from your Cash App. But if the shopkeeper is willing to take the same amount of dollars worth as the Bitcoin, is like, well, I'm going to keep the Bitcoin then, because if he's going to accept the dollars equally, I'll give him the dollars. Right. Okay. Like, because that's the worst money compared to the Bitcoin. So if I were the shopkeeper, they're the ones that haven't grokked it. It's not the consumer that needs to be educated. It's those shopkeepers. When Bitcoin was 20,000 just a few years ago, if you had offered a 50% discount, you would still be way up, right? Like, they should have been offering huge discounts to get as much Bitcoin as they possibly could. So they didn't do that. Like, we were saying that at the time, actually, like, people should be just offering discounts to get as much Bitcoin as they can on their balance sheet, these companies. But they didn't. But they'll, maybe once the mad rush, if there's like during the hyperbolic phase of this, hyperbolic, that's Max, during the parabolic phase of this, of this bull market, like, then maybe you'll see companies, shops saying, instead of, we'll take $5 for the coffee, or like $2.50 worth of Bitcoin.
Yeah, definitely.
Yeah. You make that such a good point. Go ahead, Max.
No, that's it. I just agree with that. No. I think that, when Jack Dorsey says that he's worried that people are not using it enough in transactions day to day, I see his point, but I'm not worried about it.
Yeah.
And Stacy, you made such an interesting point that I guess I hadn't really thought of before. But it's kind of the same story with Bitcoin. It's that early adopters, first movers, tend to win in this space. So if I'm a business and I'm accepting Bitcoin, like you said, only a couple of years ago, when it's at 20,000, and I'm offering a huge discount, I'm up, 6x that it's been since then, just about. For instance, I'm sure our good friend of the show, Isabella Santos, has the Bitcoin Cafe in Isla Mujeres, which is accepting Bitcoin. So there are people out there that are forward thinking, and I got a feeling we're going to see her cafe all over the place in a couple of years after she's one of the first, winners from adopting that. It brings me, though, to another question that has been kind of unique to this cycle, and it is the seeming absence of retail in what has seemingly been an institutionally dominant Bitcoin, how do I put this, phase right now. Max, I'd be curious from your perspective, why do you think that is? Is it unit bias? Is retail feeling priced out and Bitcoins need to get a certain price to where they feel like it's even worth it for them to buy in, or they can't afford to wait any longer? Do you have any thoughts about why that's happening this cycle?
Well, IBIT is a retail product.
Yeah, that's the most successful.
I guess people aren't holding it native.
It's the most retail product is IBIT. And when you say Larry Fink has 600,000 Bitcoin, no, he doesn't have 600,000 Bitcoin. The people who bought his ETF have a combined 600,000. Yeah. So the retail participation is extremely high. If you consider that you've got these, it's exposure to Bitcoin, right? So that's a different question. Right. But as far as having Bitcoin on in your life, in your portfolio, you've got huge retail interest with the Bitcoin treasury companies, with the ETFs, and that's gone global. So you have a big retail participation.
But there's almost zero on chain, right? There's everybody's buying paper Bitcoin. That is true. They're getting exposure to that, and you don't see the retail participation via the exchanges like in 2017 or maybe 2021. And so therefore you're not seeing that sort of altcoin thing either, that they often follow Bitcoin up. So there was a real distance between Bitcoin and the other coins because of the institutionalization of Bitcoin is what I think you could call it, the paperization of it. I think there's a lot of participation, as Max said, in IBIT is hugely successful, and all the other ETFs. But it does show, and I think probably Jack Dorsey is concerned about that, is like that there's a lot of education that still needs to be happening about self-custody. I think people are afraid to self-custody. They don't want that responsibility of figuring out how to do that, right? Or fear losing it. So yeah, that's what is true, is that there's massive retail participation. It's just that it would be good to actually know the numbers of when they do that thing of like how many what percentage of the population of America owns Bitcoin, and they'll say like 14%. Like how many actually own Bitcoin and how many own exposure to Bitcoin, I think is going to be an important number to look forward, in the future. It was like actually how hyper Bitcoinized is this economy or not.
Also, there's a lot of Bitcoin trapped. We saw recently something like 70 or 80,000 Bitcoin over there at Galaxy was transacted. They suddenly wallets that people thought were lost are not lost. They're actually back in play. And a lot of these banks are going to offer the ability to put Bitcoin on deposit and use as collateral for your traditional finance account, which is tied into a credit card. So now, okay, let's say you've got 5-10 million in Bitcoin. It's in a wallet. You haven't touched it in years. You activate it. You stick it in your Schwab account. It's now marginable, and you're trading Bitcoin treasury companies, and you just use your Amex card, which is debitable on your Schwab account. You just engaged in a Bitcoin transaction, essentially, because that transaction was collateralized by your Bitcoin. So Bitcoin as a pristine asset will make its way into the banks, and a lot of Bitcoin is out there. It's a $2 trillion asset, but it's not an asset that's fully monetized yet. There's a lot of paper Bitcoin, a lot of exposure to Bitcoin, but the Bitcoin itself is still in the shadows, and that's coming out of the shadows because the rails to the retail banking are opening up. But like I said before, you're not separating money from state, you're reuniting money and state. So there's an issue with that as far as the use case for Bitcoin and what it ultimately means. And that's the message I would like not to get lost, is that ultimately we would be better off if we all were self-sovereign. But, that's still a message that is being delivered, and a lot of people are hearing it.
Yeah. And so do you think then retail is investing in things like IBIT, for instance, because it's easier, they don't have to self-custody, or is maybe part of it, if you look at Strategy's stock price since they started acquiring Bitcoin in 2020, I think it's up considerably more than what Bitcoin is itself during that same time period, definitely a higher alpha. Do you think retail kind of tends to go for those seeming higher alpha plays? I mean, that's why we see people invest money in all these quote unquote shit coins and stuff as well. Or do you think mainly people just don't want to custody it because it is still a bit of an intimidating thing to a lot of people?
No, people are just buying numbers on a screen. So, and they like those numbers and they see the number go up and they buy the ETF and they have no conviction. So in a bull market, they'll buy it, and in a bear market, they'll dump it. So they're not conviction buyers. They're just adding liquidity to this big market. And meanwhile, the ETFs are buying a lot of Bitcoin. And I think one of them now has like for like redemption of Bitcoin. So you can actually redeem your ETF for actual
Only institutional.
institutional main chain Bitcoin. So that's like a kind of a step in the right direction. But the idea of self hodling for these retail buyers and ETFs never crosses their mind.
I think it's important also to note that BlackRock is a good one to look at. Is they have the Bitcoin ETF and the Ethereum ETF, and then you could see that the story of Bitcoin is easy. It's a powerful story. There's no story for Ethereum. What is it? Right. Why? Like, there's no story for any of the other currencies, the coins out there. BlackRock actually just recently said they're not going to offer a Solana or one of the other coins. I don't know. But they're not going to be, or XRP. They're not going to be offering, ETFs for any of those. They're going to they're sticking with the Bitcoin one, especially. But you could see the volume there. You could see how the work of removing how ETFs removed the unit bias that you mentioned, because there was a unit bias before, and you saw that back in 2020, 2021, when the last time Bitcoin went up, is the altcoins. People were like, $60,000 Bitcoin, I can't afford 60,000, but I could afford $3,000 Ethereum, right? So they went into the altcoins. And the ones even smaller, the ones $10 or $20, I could afford that. So you saw that in the last round, but the ETFs just destroy the unit bias, because you just know it's like $50, whatever. Like it's a $50 a unit there. And without that unit bias, so off the exchanges, like it used to be the exchanges, every single cycle before now was on the exchanges, where the whole unit price existed. But on Wall Street, where there's no unit price like that, Bitcoin just trounces the other coins in terms of the ETFs. So that's because it's the only one that has a story that makes sense. That is money. That is digital gold. That is digital treasury. Basically, it's money. It's sound money. It's a layer one money. However you want to put it. It's got a story that is easy for people to understand. And you could see that with, remember the excitement of when the ETFs were first happening, and you saw the commercials, and how are they going to pitch this to retail, right? And all of the Bitcoin ETF commercials were powerful and easy and beautiful, some of them, right? Even Coinbase, right? Like, so they keep on putting out these amazing Bitcoin commercials. They never do a commercial about XRP or any of the other tokens that they actually push if you sign up for them. Like it's like pushing the other tokens, because the exchanges make money on that, right? But the story, the narrative is only in Bitcoin. So that's the only story that matters.
Yeah, I was very interested to hear Tom Lee on CNBC talk about Ethereum, and he's got a price target for Ethereum. And he has no story for that, though. It's like, well, it's going to grab a percentage of Bitcoin's move, right? So there's actually it's no pitch at all. And so now, because it's unit price bias, and it's easy for people to say, well, it's at a lot less than a Bitcoin, it's going to catch up to Bitcoin. So it's CNBC playing their usual game of shooting for the lowest common denominator of their audience, right? They don't have a sophisticated audience, and it's sad to see, but that's how they make their bones. So have at it, boys.
Yeah. And Stacy, you mentioned some of those Coinbase commercials. The one that comes to mind is they have, I think it's like a couple containers of like Bitcoin, and then behind it there are bigger containers of dollars that have been like created during that same time. And it's so great to talk to you two about this, because I haven't really heard anybody go into depth about the storytelling and how that makes the journey of Bitcoin more accessible and relatable to the masses, which, aside from the fact of being perfect money, makes a lot of sense as to why it's resonating with more people than all of those other, shit coins combined. I mean, Max, you're even on record of saying that you think Bitcoin takes power away from people running the financial system. So it makes me wonder, what do you think the biggest shift will be once Bitcoin really starts replacing that old system? What's your vision for the Bitcoin future look like?
Well, self-sovereignty means that you don't need any of that infrastructure. You don't need any of those salesmen. You don't need any of that anymore. So that would be a relic, of the past. It is just a change to a much different reality. And you mentioned the ads on TV for Bitcoin are becoming more sophisticated and more targeting the actual use case of Bitcoin in terms of its way to hedge against inflation. And then Coinbase put out this phenomenal ad that got banned in the UK, which shows like a life in the day of a British person. And it was absolute misery, a dystopian nightmare. And the British people, took umbrage at this. And I think Ofcom banned this advertisement from being shown in the UK. And it's really surprising to me that they took that particular approach, because after living in the UK, it's amazing what you discover when you live there is that once you leave London and once you leave Brighton, the poverty rates are really extremely high. The average poverty rate in the north of England is much higher than, let's say, the worst county in Mississippi, United States. There's abject poverty in the UK because of 300 years of central bank larceny.
Chancellor on brink of second bailout for banks.
Yeah, exactly. Yeah. And there's a good basis for that.
Yeah, absolutely, man. Go ahead, Stacy.
Also, actually, I forgot what I was going to say about something about that, but the Bitcoin, the narrative is a narrative that has appealed to people since the beginning of time, and it has an immaculate conception, right? And the apostles and disciples, spread the word on the equivalent of the Roman roads. Like the Romans built those roads across their empire, and the United States built the roads of the internet, the cables of the internet around their empire, and the message of Bitcoin was transmitted over those roads, the equivalent of the Roman roads, and these are the American roads, the highway system of the internet. So the superhighway, as they call it, I think, right? And America's superhighway, the disciples of Satoshi, transmitted the message across the global superhighway.
Yeah, speaking of Jack Dorsey, his new BitChat is really cool because you don't need the internet to run the network, right? It's nodes on batteries on local area networks, right? And so this is the answer. People always say, what if the internet goes down? You don't need the internet to run Bitcoin. And so that's a great technology that I was happy to see. And it's cheap, and it's reliable, it's redundant, and it's available. And it just, it's actually the only property that can't be confiscated. If you have any other form of property, it can be confiscated. Even if the internet goes down, doesn't mean your Bitcoin disappears. I mean, as long as you've got the network running in some form, everything is still there. The difficulty adjustment just, makes the adjustment, and we're still up and running, and it's still behind an impenetrable wall of encryption. It's the only non-confiscatable, unconfiscatable, uncensorable form of property that you can avail yourself to at no cost, right? Never before history has this existed. If you had gold, you need a vault. If you have a house, you need security. You need security to guard your property, but not so with Bitcoin. And this is one of the liberating factors in El Salvador. People realize this. And, they like the fact that they've got money that nobody can touch. It's theirs. It's growing in purchasing power, and it gives them hope. And that's why you have this emergence of the fourth turning in El Salvador, is that there's a groundswell of hope. And a lot of it comes from Bitcoin. And of course, the president is doing a fantastic job, but you put those two together and it just adds up to an exit of the fourth turning and a beginning of good times.
Indeed. And I got to tell you, we are so thankful to have two stewards of the Bitcoin ship like you two, steering us toward that new direction of Bitcoin's future. You two have been there almost since the very beginning, and you have probably orange-pilled more people than anyone in the world for my dollar. So I want to thank you guys so much for all your efforts in the space, and especially for taking so much time with us today. It was truly a treat for me, and I'm sure our audience as well, to get to learn more about you both and your opinions on the space and where we're going and heading. And I just got to say, we were so glad to have you here on the Blockchain Report today, and thank you so much for your time. Before I let you go, though, I'm sure there's at least a couple people in our audience that haven't had the chance to listen to the Orange Pill podcast or some of your other endeavors that you have going on right now. What's the best place for people in our audience to check out what you two are up to today and going on into the future?
Well, definitely follow me on Twitter. Max already has enough followers, so don't go follow him. Just follow me. I'm at x.com/Stacy Herbert. No E in Stacy, STACYHERBRT. I have way more imposters on Twitter than he does. So I blame those imposters. I think people are following my imposters.
Yeah.
And maybe Max Keiser at Twitter. We also have Orange Pill Pod. Right?
Yeah, we got a golf tournament January 8th through 10th in El Salvador. Pool party tickets are available. You don't need to play golf to have a lot of fun wearing the hat.
And you get to hang out with me
at the pool and talk, Bitcoin. And remember, everything that Michael Saylor says that sounds smart and intelligent, I said first.
All right, I see why you're the entertainer of the two. You're great, and we really appreciate both of your time today. And really quick aside, Stacy, I actually got hit up by one of those imposters when we first started the show, and I was like, oh wow, Stacy has heard of us? And then she started asking me how my trades were going, and then I was like, I better just take a step back from this one. But again, you two, thank you so much for your time today. It's been an absolute treat, and we can't wait to talk to you both again in the near future. I hope you have a wonderful week.
Oh, thanks.
Thank you. It was fun to be here. Thanks so much.
Pleasure was all ours. All right, we're taking a break. More Blockchain Report when we're back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, and we're back, and one more big thanks to Max Keiser and Stacy Herbert. Weren't they just fun? And make sure to follow them both on X. Well, actually, just Stacy. Max has enough followers already. Her words, not mine. But they were great. Give them a follow and a like. They're super fun. All right, it's time to wrap things up for today's show with a little bullish, bearish, or BS. Let's do it, gang, and see how things are looking for Bitcoin. First up, to recap, Tether, the stablecoin giant that famously is allergic to audits, just hired Bo Hines, Trump's former crypto policy guy, to lead their U.S. strategy push. His job? Convince Washington that Tether isn't about to blow up the entire financial system. I am bullish on this, all right? If Tether can cozy up to regulators and look more legit, it certainly reduces the risk of a crackdown and makes the U.S. market friendlier to stablecoins. And like it or not, stablecoin adoption tends to grease the rails for Bitcoin's liquidity. So Tether finally playing nice with regulators equals good for Bitcoin. I'm bullish. Next up, we have roughly 19.6 million BTC are already mined, leaving just 1.4 million to be dug up slowly until 2140. You factor in millions of coins that are potentially lost forever. We'll see if quantum computing can fix that. Either way, the real supply might be scarcer than most actually think. And you got to be bullish on this, right? I mean, scarcity is Bitcoin's killer feature, its differentiator. And every headline that reminds the world that there's not enough to go around is rocket fuel for long-term price pressure. Fiat keeps getting printed like toilet paper. Bitcoin just keeps getting rarer and rarer, baby. So I'm bullish. Last up, we got Justin Bond's claims that by 2036, block rewards will be too tiny to secure the network. Quantum computers could break crypto and Bitcoin might implode. Critics say he's just the 475th person to declare Bitcoin as being officially dead. As I talked about with my main man Anton from Zappo Bank earlier, we're calling BS on this, all right? Bitcoin survived 15, 16 years of FUD, China bans, government crackdowns, 474 previous obituaries. So if anything, the constant doom headlines only highlight Bitcoin's ongoing resilience, and history says that is good for price action. So another Bitcoin obituary, pile it on. We'll take a look at it at 99bitcoins.com. All right, so today's final score, 2 bullish, 0 bearish, 1 BS, which means today's overall diagnosis, we're in bullish territory, baby. Bitcoin is scarce. Tether was trying to finance with DC, and Bitcoin is dead. Crowd is still wrong, but alive and well. That, my friends, is a recipe for higher prices, not lower, as we move into the future. Don't let this little dip scare you. This is the calm before the next big storm, baby. Well, that's a wrap for today's show, boys and girls. As always, thanks for tuning in to the Blockchain Report. If you haven't already, please do us a favor and give us a like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms that matter. And I will see you, boys and girls, same time and same place tomorrow for more crypto chaos and Bitcoin bedlam right here on the Blockchain Report. Until then, sayonara.